All right. Yo, what's up? What's good for everyone watching this on the YouTube replay? So I hope you're having a great day. In a little bit, I'm going to cover all the stocks that you guys have in the chat. But at first, I want to cover, or let me start this as an intro because I'm going to make this as a video. Yo, what's up, guys? I hope you're having a great day. In this video, I want to go over some stocks that have recently reported earnings, and they have actually fallen after earnings. I think these are pretty good stocks to buy the dip on, like AppLovin. They reported earnings. They initially went up 8%, and now they're down 7% on the day with no news. Same with Uber. They reported phenomenal earnings. Amphenol, they are down bad from earnings. So I actually wanted to cover a few of these stocks. These are some of my favorite growth companies to buy the dip on. ISRG, this one's a pretty cool robotics healthcare name with no debt, $7 billion of cash. Pretty cool. Coca-Cola Consolidated, this is one as well that has fallen 16% yesterday, and now they're falling another 2% on the day. So yeah, if you like this kind of stuff, feel free to drop a like. I'd greatly appreciate that. And let me start this off by doing a quick portfolio update. So yeah, Inno data on the day is going crazy. So check this out. If I head over here to my Roth IRA, my Robinhood portfolio, my Roth IRA is up 7% on the day because of Inno data. Just today, they are up 92% on some phenomenal earnings. I mean, they had some gangbuster earnings. I won't dig into them, but that's really saving our portfolio because our main dividend account, our main bulk of our portfolio, is down 0.36% on the day. Here are all the stocks that we own in here, and here's my total percent change on every stock. So luckily, we are green on every stock except for McDonald's. We're down on McDonald's. A lot of the food companies have been struggling a lot. Yo, what's good? Looney, Armith, MC, Mendo. Yeah, dude, Inno data went crazy. Dat one, dude. What's up, y'all? Give me a minute here and we'll check out some of y'all stocks. I wanted to go over a few of my stocks first and then we'll get into y'all stocks. So give me a minute. I apologize, but I'm kind of going to make this into a video later. Thought it'd be a cool idea, like a YouTube video. I'm gonna like record this, screen record it later. So yeah, let me get back to it. I'm gonna cover. Here are the stocks I'm gonna cover real quick. So I'm gonna cover basically all the stocks right here: Coca-Cola, AppLovin, Uber, Reddit, Amphenol, ISRG, and then we'll check out y'all stocks. Or maybe I won't do them all. Maybe I'll just do a couple. But yeah, anyway, here's my Webull portfolio today. Today we're up 0.62, but all time we haven't done too incredible. We're only up 23% on the time, which has underperformed the S&P 500. But yeah, here are all our top stocks. We don't have many companies that are green on the day, but AMD, new all-time high on AMD. We're now up 250%. I can't believe it. I mean, people used to call them advanced money destroyer, but this is like advanced money duplicator. I mean, pretty crazy. Just another new all-time high. Sprouts Farmers Market has had a little bit of a decent recovery from its bottom. I know they've been struggling for a while. Power Solutions, Iron Mountain, but yeah, we do have some losers on the day, like AppLovin. Like, it's mainly software. If we just go to like the whole entire like Watchlist here, it's mainly software that's struggling. Cloudflare down 25, Toast 15, UI 12. Dang, Medley's down 11. Symbiotic, the great robotics company's down. Yelp. So that's that portfolio. And then we have our Moomoo account. And yo, OLOP Papa, yo, thanks for that gift there. I greatly appreciate you. Hope you're having a great Saturday. So, or Friday, I mean, here's our Moomoo portfolio. This is called our buy and never sell portfolio at the top because once we buy a stock in here, we just diamond hand it. Like Powell Industries, we're up over 1,000% on this stock, but we've never trimmed or sold a single share of this company ever. We're just diamond handing it. Same with Comfort Systems. We're up 430%. We haven't sold or trimmed a single share. Coca-Cola Consolidated, though, on the other hand, is a stock that is down bad this past week. So I actually wanted to go over Coca-Cola Consolidated's earnings because I think it's actually a pretty decent time to nibble and dollar cost average into this company because the valuation is pretty cheap at the top. The PE ratio, that's the price to EPS, basically price to net income. They trade at 23 times PE, which is pretty fair. That's cheaper than the S&P 500. And check out the earnings. They were pretty good. Actually, they were good in my opinion. The revenue was up 16% year over year, and the profits were up 25%. So that means margin expansion. But they're actually, if we go to the net income, though, the net income was only up 7.67%. And this was basically because of interest. Basically, it's not something to worry about. Basically, a one-time adjustment. It was interest, but another one-off adjustment. So the net income was actually up a little bit more because the operating profit was up 25. But check this out. One of the reasons why the stock has gone up so much is because of the share buybacks. Last quarter, they bought back $2.5 billion of their own stock. $2.5 billion, and the whole company is worth $11 billion. Actually, they bought back, watch out for that guy in chat there. They bought back all those shares when the stock was under $10 billion. So basically, what I'm trying to say is they bought back in the past year 25% of all the shares that exist. What does that do for the cost of the dividend? Look, the dividend used to cost $21 million. Now it only costs $16 million. They didn't cut their dividend. They just bought back so much of their own shares that the dividend, they don't have to pay dividends to those shares anymore. And check out also the EPS. So the net income was up by 7.67, but the net income per share was up by 40% because of all the share buybacks. So that's one reason, like that's why the balance sheet looks so weird all of a sudden, because they bought back basically $2.5 billion worth of shares from the main Coca-Cola company. So I'm a big fan of that. So point being, I'm really happy with Coca-Cola Consolidated's earnings. Nothing to complain about there. All right. So would now be a good time to invest in Coke? Yeah, actually, I think it's a pretty decent time to nibble on some shares. Don't go crazy, but I think it's pretty decent. Yo, what's up, Plasma? Micron to the moon. How's Micron doing? That's your memory shortage stock. Dang, look at that. They're up 11.3% to a crazy new all-time high. This is what I've been saying about the memory shortage stocks, because the valuations, even at all-time highs, like if you look at this like on a technical point of view, like RSI, this is really overbought. I agree with you. But in terms of evaluation, look at the forward PE. Again, a forward PE is the price to next year's net income, and they only trade at 7.8 times next year's net income. I think this can easily stretch up higher to like a 9 or a 10 forward PE and literally send this up another 15% and still not even be crazy overvalued in terms of a forward multiple. So if you're wondering why these stocks are going up so much, like SNDK, SanDisk as well, it's because they're not even expensive. Here's SanDisk as well. Look at this one. Even at crazy all-time highs, the forward PE, where's the forward PE here? It is a 8.9 times next year's net income. And that's how this is a great rule of thumb. Like that's why you always pay attention to the forward PE, because when it's still cheap like that, that means you shouldn't trim or sell the stock really. Like it's okay to maybe trim a little bit, but if you're a shareholder of this stock, definitely don't fully sell out of your position, but really don't trim much, because I really think it's going to continue to climb higher. I don't know if I'd be exactly buying shares right now, but yeah. Yo, what's up, Matt? Can you explain the difference between Blackstone and BlackRock? Yeah, they're just two different companies. They just own different assets. BlackRock is in the ETF business, but both of them are asset managers, private equity, private credit. But what I love about BlackRock specifically, if you ever go to a stock and you go to the shareholders and you see like BlackRock, they own like at the bottom 3.8% of the company. BlackRock doesn't actually own those shares. They own it on behalf of the customers via their ETF. So what I really like is their crypto ETFs right now and their gold ETFs. So if we go to their alternatives revenue, that's what this crypto revenue goes under. This business has been super growthy. Their alternatives revenue from the full year 2024 to 2025, it grew 72% year over year. And that's a record if we just zoom out. And that's mainly because they released their crypto and now Ethereum ETFs. So that's a really cool thing. And then you get a nice dividend. BlackRock's one of my favorite dividend growth stocks. If you buy BlackRock right now, you get over 2% of your money back and a qualified dividend every year. A qualified dividend is taxed at long-term capital gains. And for me, if you make under $48,000 a year salary, or just in general, if you make it a 48K, long-term capital gains is taxed at 0%. So even in a taxable account, the dividends you receive are tax-free. That's why I don't mind having a taxable account, keeping dividends in here, because the taxes are favored for low income. Yo, no way, Louise. Thanks for becoming a YouTube member. Yo, whenever you become a YouTube member, you get access to my private Discord. So go to my profile and like community post. It's like a members only post and you can join. Thanks, Louise. Thank you so much. I really appreciate you, man. If you have a stock you may look at, definitely let me know. So let's see. What about Amphenol? Worth buying? Absolutely, Thomas. I hope you're having a great day. So yeah, where's Amphenol? So yeah, this stock is one that I've been buying at current prices. So check this out. Like I bought a share down here at 128. 129. I even bought one at 135. And right now it's at $131. Here's why I think this is one of the best stocks to buy. Nvidia is a big customer. Nvidia's NVLink spine uses Amphenol's copper cables, subsea connectors, and fiber optics. So Amphenol's Nvidia is a big customer, and also Google. Google uses Amphenol's copper cables for their TPUs, and this is why I think this stock is cheap. This is a growth company, so you really don't look at current net income multiple because they trade at 37 times net income. They only trade at 24 times next year's net income. This is, I kid you not, I'm about to get paid too. I'm going to buy more Amphenol. Not financial advice, but I can almost promise I'm going to buy more Amphenol. And if it just stays at this price, I will be buying it at this price. I'll be happy to buy it lower. Check out how growth data is. Here's why this company deserves to be at a higher multiple, because they have real growth. If we go to their communication solutions, this is real. Revenues up, like these are the year-over-year growth rates in the middle. This is what I like to dig into because it justifies the multiple. The revenue's up 87% after it grew 90%. Like all the growth rates, like for the past 5 quarters, it's like 90%. And not just their communication solutions, but also their harsh environment solutions. That's up 33 after it grew 38. And then also their interconnect and sensor systems, that's up 24 after it grew 5. So record growth rate. That's what I love about this stock. And check out, this is what you want to see. If you're going to buy and hold a stock, you want to make sure the company's growing. And this is the revenue right here. Just revenue, the sales, the lifeblood of the company. The revenue's up 58% year over year. And the profits on that is up 82. Record profitability. If you zoom out, look, there's never been a more profitable quarter ever. This quarter, it was $1.95 billion. So that's what I love about this stock. Same with FCF, which is free cash flow. It was up 44% year over year. So I have no complaints about Amphenol. You get a good yield too. It's actually slightly higher yield. You get like a 0.7% dividend, but the 25 forward PE implies to me that this company is going higher because of the growth that they have. Remember, they're a big customer, or some of their big customers are Nvidia and Google. They're big in aerospace and defense. They just acquired this one aerospace and defense company called Textron. Kind of cool. All right. Do you have any stocks that you think are undervalued now? Yeah, I actually do have a few. What's up, Joe? So one stock I wanted to cover was AppLovin. It's one of my most recent purchases. Out of all, when all the software stocks took a dip, I'm like, what software stock am I going to buy? I want to take advantage of this dip. The one I bought was AppLovin. And yo, I'm so sorry. I'm missing so many stocks here. Joe, yeah, said CoreWeave. Thanks for the roast there. Yeah, we'll get to CoreWeave after this. And what's up, Silly and Chris and MC? What's up? I'm so sorry. I'm a little behind here. Yeah, we got to do Celsius right here. Oh yeah, watch out for the people in chat there. You know, I sell nothing. I have no course book. I'll never follow you, DM you. I sell absolutely nothing. And none of this is financial advice. Just on here, literally sharing my opinion. I just love stocks. Love talking about stocks. So anyway, here's AppLovin. I am so impressed with this stock right here, and you will be too. If you're not impressed with the fundamentals, then feel free to hit the dislike button or something. So here's AppLovin. Here's what's crazy about this stock. First off, they're not expensive because this is a growth company. Again, this is what we frequently do. We look at the next year's multiple, not current year's net income, but next year's net income. This company trades at 26 times next year's net income. Here's why that's cheap, and here's why I can easily see that going to like a 30 or a 40. So look at the revenue. This is the organic revenue. They didn't do an acquisition or anything to get this growth. This is organic. The revenue's up 58% to 1.84. It's never even been close to that before. So this is a record revenue quarter, and not just record revenue, but on this 1.84 bill of revenue, they kept in after tax, after they paid 220 mil of taxes, they kept on the 1.8 bill of revenue, 1.21 billion of net income. You won't believe this. Look at the trend. Every quarter, their net income hits a new record, and that means their net margin is literally a 65%. This is a higher net margin than Nvidia. This company is practically collecting royalties, and not just net income, but free cash flow as well. They have a 70% free cash flow. What would I call that? Like free cash flow margin. So for every dollar they bring in, 70 cents of that is free cash flow, and 65 cents of that is after-tax net income. So this company is collecting royalties. It's an advertising company, and they only traded a 26 forward PE. Or what was it? Yeah, 26 forward PE, so only at 26 times next year's net income. They're down 6% on the day on no news. They reported earnings yesterday. They were phenomenal. They went up on earnings, and now all of software is falling today. It's actually, I think it's just a sector sell-off. So, and this is the one I bought out of all the software stocks to buy on the dip. I bought that one. Yeah, if we go to software like Cloudflare, down 25. Toast is getting toasted, down 15. So, and like Salesforce, let me check out that list actually. Salesforce is down. Okay, actually having a little bit of a recovery. Adobe's down too. So, okay, That's AppLovin. Pretty cool. Let me know what you think. I do think that one's undervalued. I bought one share of SanDisk, let the FOMO sit in. Hey, as long as it's a really small position, I don't disapprove of that. Hey, yo, what's up, Nest? And Clem, how's it going, man? So let's do Celsius. If you're a fan of energy drinks, I think you'll like this one. Actually, for context, check out Monster Beverage today, up 15% to a new all-time high. So this stock is actually one of the best performing stocks ever. And they're at an all-time high today. The number one bottler for them, their biggest bottler, is Coca-Cola Consolidated. If you didn't know, Coca-Cola owns 25% of Monster. So that actually makes me bullish on going into the future because Coca-Cola Consolidated is down right now. But let's do Celsius right here. So if you've heard of Celsius, or if you've heard of Alani, or you've heard of Rockstar Energy, this company owns all three of those brands. So it's like a pure energy drink company, and the valuation's getting cheap. Another one where you look at the forward multiple, they only trade at 20 times next year's net income. That is cheap, actually. And here's the profitability. They are the most profitable they've ever been if we zoom out. So they're making now they're making 100. Before tax, they made 140 mil. After tax, it was 110 mil. So they're making 400 mil plus in net income a year. So yeah, they really only trade at 20 times next year's net income. I like the growth. The revenue's up 137% year over year, but a lot of that growth is fueled by their Alani acquisition. If we go to their cash flow investing activities, you want this to be negative because that means they're actively buying assets. If this number was positive, that means they're actively selling out of their own assets and receiving money for it. But yeah, they spent $1.3 billion buying Alani. So pretty cool. I actually love that brand. I actually love Alani's. I see them all around my college campus. So anyway, I actually do like them. At a 20 forward PE, it really is a decent time to dollar cost average. All right, what's next here? What do you think of buying Coca-Cola? Yeah, that's the first stock we looked at. I think it's a good time to dollar cost average. You wouldn't want to go crazy yet, but it's a good time to if you wanted this as 5% of your portfolio, don't make it 5%. Definitely don't make it 5% today, but you go ahead and make it like that small 1% because of the 23 forward PE. One thing I love about this company is the share buybacks. I'll be super quick with this, but I think this is so cool. They've bought back 25% of all their shares, and look at the cost of their dividend. The dividend last quarter cost them $21 million to pay their dividend. Now it only cost them $16 million. They didn't cut their dividend. It's just whenever they buy back so much of their own stock, they don't have to pay dividends to those shares. So the dividend goes down. Cost of dividend goes down by 25%. Gives you literally 25% more ownership in the company. That's what I specifically look for companies that do share buybacks. So like every stock in here does major share buybacks. That's what I specifically look for. Companies that do dividends and share buybacks. I just look for shareholder-friendly companies. Hey, what's up, James? Good to see you. DRAM and URA are on my buys today. Hey, URA, this is the uranium ETF. I actually am a big fan of uranium, especially because the US, we are no longer buying Russian uranium, so we're now sourcing it all from our own. We're trying to be more rare earth mineral independent, so we're sourcing it from Canada and the US now. So the price of uranium has gone up, and I think it's a good investment because nuclear reactors are actually powered by uranium. So if you don't know which uranium stock to buy, this is an ETF to just diversify you into all the best uranium companies. If I had to pick one to own, to buy and hold, pick and choose one, Cameco is by far the best, most quality one. LEU is a really good one. UEC. And also, here's a cool one. This is Solstice right here. This is another niche uranium play. It's a specialty metal one at a 29 forward multiple. But check out this third line right here. The third line, it says, this company owns the only uranium conversion operation in the U.S., which will see higher sales from growing nuclear power generation in the coming years. So this is actually a pretty cool company right here. They just IPO'd, and uranium has to be refined to be used as fuel for nuclear reactors. So basically, these companies mine it like Cameco, UEC, and then it goes to Solstice, then it goes to the nuclear plants. And if you're also a fan of nuclear, I found the best nuclear stock that exists. It's Constellation Energy. They own 33% of all the U.S.'s active nuclear reactors. There is no close second. This is the purest actual nuclear reactor company. There's a lot of startups called SMR, small modular reactors. I really recommend staying away from those. Those are like a proof of concept. None are coming online till 2030. But this is one that already has a bunch of active nuclear reactors doing. They have so much leftover money. They're doing dividends, buybacks, acquisitions because nuclear is such in demand right now by data centers. They want the cleanest form of energy, the most reliable. All right, let's check out more here. MC said, would you check ADPT? Sure, let's check it out. And then we'll look at what's up, Shark Water? He says NOW hitting rock bottom today. We'll look at service now after this. And hey Joe, what was that stock again? Thanks again for that, Rose. I'm so sorry, Joe. I just get lost in the chat sometimes. I appreciate everyone that's here. Yeah, Joe, we'll look at CoreWeave after this. For sure. Remind me, I got you. So here's Adaptive Biotechnology. So they're down 7% of the day. Not too bad. I mean, they're kind of at where they were a couple months ago. But let's see what they reported. So they beat on revenue, they beat on net income, they beat on EPS, and they beat on EBITDA. I think the analysts just don't like that they're losing net income probably. I mean, they've narrowed their losses. Actually, I would be really satisfied. I don't know why they're down 7%. I'm assuming it's future guidance. Like that's what happens in current markets. When they beat on every metric and the stock still falls, it must be future guidance that's bad. Because check this out. Oh, hey, watch out for those people in chat there. By the way, I sell nothing. I have no course. Literally sell absolutely nothing. I'm just trying to give my opinion. Nothing's financial advice. So watch out for the people in chat. I'll never follow you, DM you. Not in a mean way, but you know what I mean. So watch out for people impersonating me and stuff. Okay, but yeah, they are narrowing their losses. They still lost 20 million, but that's a good narrowing. So this is a biotech company, so yeah, there is no forward PE, so it's kind of tough to value this one because there is no forward PE or it's negative. But as long as they keep on beating expectations like this, I mean, I don't see much of a reason for this one to go much further down. 2 billion market cap isn't too shabby. So let's do CoreWeave. This is an Nvidia company. So who the heck is this and why is this here now? I have no clue who this is. Actually, he has some really good AI infrastructure name. Anyone know who Leopold is? But anyway, let's go to the Nvidia portfolio. Nvidia is so big that they own stakes in some individual stocks. And one of the companies they have a big stake in is CoreWeave, 17% stake. They also have a stake in Nokia, which I saw someone asking for. Let's get to that one later. And also Nebius. They just took a stake in Iris Energy again today. So what does Iris Energy, Nebius, and CoreWeave all have in common? They all do the same thing. They are data center companies where they're not really the picks and shovels plays. There's nothing proprietary. All they do is own a bunch of GPUs in a data center. CoreWeave secures 10 customers with 1 billion commitments each at 400 million that's 400 megawatts. You got to see their backlog right here. That's what I have to pull up on CoreWeave. Their most impressive things to backlog. But they don't have a good they don't make any money. They're very far from profitability. So this is the good thing. Like this is the great news that the revenue's growing like triple digits for the past 5 quarters in a row. Revenue keeps on hitting a record, but look at the net income. This is the one part that does scare me because I love deep diving into the fundamentals and just like these net income losses do scare me because this isn't what all they do is rent out their graphics cards. They have a bunch of GPUs and right now they're in such demand. Companies don't want to buy new ones, so they're renting out graphics cards from CoreWeave. Nothing too proprietary, but that's just in demand right now. And check out the future revenue expectations. Revenue in 2 quarters is going to be at 3.4 billion. That is insane. Revenue is going to be at 3.4 billion. Like it's never even been close to that. Look, right now it's 2 billion. It's going to go 3.4 billion in 2 quarters, but look at the net income losses. Net income losses are going to 3x worsen. They're going to lose 640 million next quarter, 600 million in net income the quarter after, and that's the only part that scares me. Like, when do they make money? And that's what kind of, or actually, check this out. Morningstar says they're actually fairly valued. Robust neo-cloud demand driven by deep NVIDIA integration and a massive take-or-pay contracts will drive long-term value growth. Well, there you go. There just isn't. That's the only, for me, like the way I'd value any other stock is look at a forward PE. There just is no forward PE, but they have the NVIDIA backing. And basically NVIDIA backs them because they're one of their biggest customers because CoreWeave keeps buying a ton of NVIDIA chips. So yeah, I don't know if that was too helpful, so I apologize. But they have incredible revenue growth, I will say. Yo, what's up? Lily is the best. Do we feel the dot-com bubble? All stocks right now are at new highs. I actually don't think we're in too much of a bubble because stocks are not crazy overvalued, or specifically the Mag 7. A lot of stocks are overvalued, but like the market in general isn't crazy nuts. I mean, Google's at, well, actually it is pretty expensive. Google's at a 31. Amazon trades at 31 times net income. Nvidia is actually cheap. Nvidia is surprisingly cheaper. Let's check it out. Yeah, what Nvidia is cheaper on a growth multiple than Google, Amazon, Apple, and actually not Microsoft. Microsoft is cheaper, but Nvidia, check this out. Even though Nvidia is at all-time highs, this sounds crazy. Here's why I think they're going to continue to climb higher. What's this app? Yeah, hey, I'm on a brokerage right here. If you'd like to get it, it's on my it's on my description of my profile. If you'd like to get, if you were of my affiliate link, it's a broker called Moomoo. But if you'd like to use my affiliate link, it's in my description profile. So anyway, here's Nvidia right here. Even though they're at an all-time high, here's my thesis. Look at the forward PE, which is, again, the next year's net income multiple. This is a growth company, so you don't really value them off current net income because they trade at 44 times net income, but they only trade at 26 times next year's net income. Here's what analysts are projecting from net income. It's still going to have 100% EPS growth. This is why the growth is not done. Nvidia's net income on the very left was at 26 billion, and on the very right, it's going to grow to 46 billion. It's never been $46 billion before. And this is why Nvidia deserves all the hype around them. This is why they deserve to be at an all-time high. If any other company can pull off this sort of real bottom line after-tax net income growth to the point where their revenue, look at this, their revenue is 68 bill. On the 68 bill of revenue, they kept after tax 43 billion, which means their net margin is a 63%. You go spend $100 on an Nvidia GTX or RTX 3080, they keep $63 after tax on that. So that's what's nuts. Yeah, here they have a crazy big market share. They have, let's see, a 24% PC GPU market share and only a 26 forward PE. That's why Nvidia, I bet, will continue to climb higher. But there is one thing to watch about the law of large numbers. If we just look at the market cap of, let's go to mega caps here. Look at Nvidia at the top right. They're worth 5.2 trillion. You buy Nvidia today, for you to double your money, they have to be worth 10.1 trillion. So it's a tough double just from the law of large numbers, but I wouldn't be shocked, like same with Google, but I wouldn't be shocked if you buy Google and Nvidia both right now, like you'll still probably get S&P 500 type returns, like 8 to 10% of your money back a year forever. So not financial advice, of course, but like valuations aren't even nutty. Opinions on SoFi, or yo, what's up, Free? How are you doing? He left a gift, or what's up, man? It's me. How's it going? It's me. Please check WULF. This is another similar neo cloud. Like they just rent out their graphics cards. So what does this company do? They own a bunch of graphics cards and they rent them out to cloud company or cloud companies. But right now, so basically, look, they own a bunch of graphics cards. 90% of their revenue comes from digital asset mining, which is Bitcoin and Ethereum mining. So they're using these graphics cards, these GPUs, to mine Bitcoin. But now they're getting asked from, like, I think it was Microsoft or no, it was Google. They're like, hey, can we rent out your chips for our cloud? They're like, sure. So now 10% of the revenue is leasing it out. So they're trying to be what CoreWeave is doing, what Nebius is doing, what APLD is doing, what Iris Energy is doing. They all do the same thing. And that's why I am worried. Like it's a commodity business, like very competitive commodity business. And that's why none of them are profitable. And that's the tough thing. Iris Energy, Nebius, CoreWeave, they're all very far from profitability. So that's why I'd rather kind of own the picks and shovels plays of AI, or own the AI infrastructure plays. I believe in the electrical supercycle that's happening. There's going to be so many tailwinds to electrical components and HVAC, MEP work, which is mechanical, electrical, plumbing. HVAC is heating, ventilation, air conditioning. Comfort Systems has been phenomenal. Powell with their switchgear solutions, electrical infrastructure play. So actually, someone said Verizon. This is a dividend stock, and this is a stock you only buy. You don't buy this if you're 10, 20 years away from retirement. You buy this when you're in retirement trying to maximize your dividend income. Here's why I'm not going to recommend Verizon. And this is going to sound crazy, but look, this are the facts. Did you know Verizon stock is the exact same price as they were back in the year 1998? So if you bought Verizon in 1998, it's the exact same price that it is today. But why people buy this stock is because they do have a sustainable 5.8% dividend. So you're getting 5.8% of your money back in a dividend every year, but the hidden cost is there's no stock price appreciation. So you will definitely total return underperform the S&P 500, but it's they do have a sustainable dividend, but just you only buy for the dividend. What's up, Vinny? He says SK. Hey, what's the ticker symbol for SK? I'm not heard. I type in SK. I don't see that one. But hey, yo, what's up, Tory Potter? What's up, man? Hey, we gotta play some Rust sometime soon. Yo, guys, my college My last day of college was today. I just finished all my final exams, so now I'm going to be streaming a lot more. If y'all want to hit the follow button, I greatly appreciate that. Uh, Someone said SoFi. Yeah, this is a really cool fintech stock. If you like the financial tech industry, this is another like picks and shovels play. SoFi. So, and I do own this company, full disclosure. So I might be biased when I go over SoFi, but I own SoFi for a reason, and that's because their quality. And they just reported earnings. I actually haven't looked at them. Let's go see what they were. Wait, SoFi Crypto bought 120 million of crypto in Q1. I didn't know they're buying crypto, but if you're a SoFi shareholder, the metric you want to really focus on is this one, their financial services business. It's 42% of their total revenue. And this is why this stock is really impressing analysts. The revenue growth, no analyst expected this in the middle, these year-over-year growth rates. Analysts expected a 50 to 60% growth rate, but not 70 to 80 to 100% every quarter. It's up 80% after 85, after 114, after 195, after 290. That is incredible growth that needs to be rewarded in a higher multiple, and that's why I think they're going to stretch higher, because SoFi only trades at literally, this is cheaper. This is so cheap. 21 times, or technically 22 times next year's net income. That is cheap for the growth rate that they have. And check this out. They just hit record revenue. This is organic. They didn't do an acquisition or anything. Just organic revenue, the sales. The lifeblood of the company is up 42%. So record revenue, if we zoom out, that's what you want to see if you're going to buy and hold a growth company where the record just hits the revenue hits a record every quarter. And not just the revenue, but also the net income. This is why people are really starting to take SoFi serious. They're a profitable money printer. They're going to be making 200 mil in net income. Check that out. Analysts project in 2 quarters, 240 mil in net income. So they beat on revenue the past 3 quarters. So I'm a big fan of SoFi and I do own them. So just a little bit. I regret every share I've ever sold of them. Yeah, hey, try not to spam in chat there. Yeah, we'll try and get to Robinhood. But yeah, the SoFi is just at such a low valuation. What happens is, yeah, hey, again, if you'd like to get this app or if you're interested in stocks and want to get in stocks, this is a brokerage where you buy stocks and you get my affiliate link. It's in my profile, like the link, the description there. If you want to use my affiliate link, it's a free app, costs absolutely nothing. You literally get for free a 3.35% APY. So we can look at, I also have a Robinhood account, but this is my favorite one for analysis. Yeah, I also have Robinhood. Robinhood is publicly traded. I use all 3 of these brokerages, and I own all 3 of these stocks, app stocks. I own Webull stock, I own Robinhood stock, I own Moomoo stock, and this is my favorite one. Actually, Moomoo stock has been phenomenal. So this app I'm using right now, this brokerage I'm on right now, is publicly traded. Here is their stock right here, and they're a money printer. I kid you not. Even if this company was not making money and was going to go bankrupt, you're still FDIC insured, but it's good to see that this app right here literally made 433 million net income. Someone was saying Robinhood stock. I'm actually liking this stock much more. Oh yeah, they make a bunch of interest income. Look at that interest income. Basically, what's so cool is for free, they give you a 3.35% APY on your idle cash for free. And that they're a genius because they make like a 3.9% APY on it, and they give you 3.35%, and they pocket the difference, and it's free money for them. So anyway, if you'd like to get this app, it's in my profile on my description of my profile. Anyway, thanks you all. That's my affiliate link if you'd like to use it. It's a broker called Moomoo. So let's keep going here. Let's do Robinhood stock. So anyway, we just looked at this app. Let's look at Robinhood as a brokerage, as an app. So I also have them. I do like Robinhood as well. I have a portfolio with them. I have a Roth IRA with them. My Roth IRA is up 6.25% on the day. We had a stock just today up 85%. Hello, Endo data. That was kind of crazy. We'll look at that a little later. But Robinhood, I'm a big fan of this stock. Actually, I'll show you my Robinhood position. Yeah, here's my Futu position. That's my Moomoo stock. Where's my Robinhood? I regret every share I've ever sold a Robinhood. I got 5 shares left. Look at this. I'm so sad. I used to own 55 more shares, and I sold it at 36. And it's 75 today. I do want to eventually buy more Robinhood, but here's why I want to buy more Robinhood. They are starting to make a lot of money from prediction markets, and the valuation is still pricey though. That's the thing. Like, now's not the time to go crazy on Robinhood because they are still expensive at a 36 forward PE, which means they're trading at 36 times next year's net income. But here's what is incredible about brokerages, because they just have incredible margins. So just revenue this quarter was 1.07 billion. So they did $1 billion of revenue, and on that $1 billion of revenue, they kept 350 million after tax. Before tax, it was 411 million. So that means their net margin was a 32%. Last quarter was 47, 44, 39. So, and they had a slight one-time adjustment. The net income would have been higher, but I think they had like a one-off thing from their earnings. But anyway, What is this right here? Any specific news? Oh wow, look at this. So Morgan Stanley launches crypto E-Trade with a 50 basis point fee, undercutting Robinhood's 95 basis point fee. So anyway, Robinhood, it's a picks and shovels play because they just collect a fee every time you go do a crypto transaction, every time you do an option contract, every time you do a prediction market, which I never recommend doing because it's such speculation. But one thing making these brokerages a lot of money, and you're starting to see every brokerage get into this because it's so profitable, are these prediction market stuff, which I don't recommend doing because, again, super speculation. But, sports, prediction market contracts, all that. Whenever you go do a prediction market contract, the brokerage keeps a 2% fee. For context, whenever you buy and sell a stock, they keep a 0.1% fee. So these prediction market contracts are 20x more valuable for their bottom line. So that's why they're pushing it. And that's also why their net income is so good right now. Anyway, they're still expensive to buy, but I'm a big fan of Robinhood stock, and I do own them. I also own Webull as well, which is this brokerage right here, which is also getting crazy. They just added prediction markets on the app. So because it's so profitable, and that's actually why I'm bullish on Webull as well. Props to Moomoo though, props to this brokerage because they're not getting into the prediction market stuff because they don't need to. They're already so profitable, and that's just not their client base. But anyway, let's keep going here. Does your college friends know about investments? So some of them, hey, what's up, the Vigilante? How's it going? But yeah, actually I'm surprised a lot of people in my college invest in stuff. Afternoon, Rolando. Have a great weekend. Can you link at UWMC? And I'm a little behind on the chat here, so I do want to apologize here. I'm super behind. Hold up. Clem said COHR. Let me do COHR, Coherent Stock. So this company is at a crazy pretty close to all-time high. They've had an incredible rally. I forget what they do. Let's see what it is they do. So data center communications. So, okay, this is starting to make sense. Anything data center, data center infrastructure is going to be doing amazing. Yeah, revenue's up 40% year over year. Let's actually see that on the revenue. So yeah, if we zoom out, they've never had a more profitable quarter. This is the highest level of revenue they've ever had. And let's check out net income on that. So yeah, or actually I should look at the operating profit. Yeah, technically the most profitable quarter they've ever had as well. So it's not just the stock following momentum, it's the stock growing because their fundamentals are actually growing. Organic revenue's up 20 and the profits are up 55. So when the revenue's up 20 and the profits are up by 55, that means margin expansion. Yeah, gross margins are up 7 after they grew 16. That's insane. So I can see why this stock is doing so well, but that being said, they are really expensive to buy now. Look at how much their net income is going to grow. Their current PE is 152. It's going to fall. That means they're going to 3x their net income. It's falling all the way to a 57 in just 1 year. So they're having this year's crazy growth rate, which is why they've grown so much. What app are you using to see this info? Yeah, hey, I'm on a brokerage right here. If you'd like to get this app, I'm on. It's on my profile, like my description. That's my affiliate link. It's actually a brokerage where you buy stocks on brokerage called Moomoo. They ask for a bunch of information because when you buy and sell stocks, you got to pay taxes on it. But yeah, my favorite brokerage if you're interested in investing. And it's the best app to analyze stocks. It's totally free, costs nothing. It's on my profile. Does Moomoo say, yeah, definitely. Even if this, again, this app I'm on, Moomoo, is publicly traded, ticker symbol FUTU. It's called Moomoo at the top. And even if this company were to go bankrupt, you're still FDIC insured. But this company, here's their before tax number. They made 532 mil before tax. After tax, they made 433 mil. Let's see some more things. They got 29 mil users. 2.88 mil funded accounts. Anyway, it's just a really cool brokerage. They only trade at 12 times net income. That's what I like them about. They're a $20 billion company, publicly traded. So anyway, yeah, if you like this app, I like this app so much, I bought their stock as well. I also use Webull brokerage. I own Webull stock. I also use Robinhood, and I own Robinhood stock. But out of all these apps, my favorite one is this one. And yeah, I have an affiliate link in my profile. If you end up depositing $100, we'll both get like a free stock, like a free share of Nvidia, I think. So anyway, let's keep going here. But yeah, you don't even have to deposit money. You can just use this app to analyze stocks. And there's so many cool features like the Super investor tracker. If there's a person in America that net worth is over $100 million, they have to make all their trades public by SEC law. So yeah, we can see what Nancy Pelosi's doing. She seems to be an expert. We can see exactly what Warren Buffett's doing. What's his exact portfolio? All that is what's he increasing, decreasing. It's pretty cool, and a bunch of other kind of popular people as well. Like, what does Nvidia own too? So kind of cool. All right, let's look at some of y'all stocks here. Let's do some more analysis. So, Rolando, again, and my apologies. And Vulcan, he said Iris Energy. We'll check out that. And hey, what's up, football? He said DYZXYZ. I'll try and get to that one too. So, UWMC, is that mortgage company? I think this company does mortgage loan originations. So basically, oh wow, they haven't done too well, probably because bonds and real estate have done bad because interest rates are so high. But I think there's going to be a refinancing boom in this company. Like, actually, a better buy, to tell you the truth, the better buy would be Rocket Mortgage. They've also kind of experienced a kind of nasty downtrend as well. Dang, they're up 9% on the day. They might have just they did report earnings. That might be a cooler one to look at. But basically, these companies, I believe, they're going to capture the refinancing boom. So whenever rates are finally lower again in a year or so, people are going to refinance the rate on their house, and they should capture that. But anyway, UWMC, they're trading at 10 times forward PE. Look at the net income projection. So they're going to make 24 mil in net income next quarter, 25 mil the quarter after. So basically 100 mil in net income a year is what they're going to make. If that is, I don't know if that's what I'm looking at here. And the company, yeah, so they're going to make 100 mil in net income a year. And look at the top right, the market cap. The market cap is worth $1 billion. So yeah, they're trading at 10 times forward earnings. Interesting there. What's Rocket's forward multiple? They are at a 22 forward PE, but this one might be more higher quality. They bought Mr. Cooper, which was an incredible. Let me see if I can still find their stock right here. Yeah, Mr. Cooper, they're delisted because Rocket Mortgage just bought them. Mr. Cooper was a beast. Okay, let's keep going here though. Is it better to buy a stock or an ETF? I always recommend have the backbone of your portfolio in a safe ETF, something like the NASDAQ 100, the S&P 500, which is the VOO. And basically, these ETFs break your money up for you into all the top companies, which you should individually, or that you would individually own. So like, if you just buy the S&P 500, it breaks your money up for you into Nvidia, then Apple, then Microsoft, Amazon, Google, Broadcom, Meta, Tesla, Berkshire Hathaway. So have the backbone of your portfolio in that. And then I would pick and choose some individual companies that you know, love, and trust. Companies that you use like a Meta, a Google, an Amazon, a McDonald's, a Coca-Cola, stuff like that. Don't just pick some micro small cap or crypto micro coin, or, actually buy some quality. And even though like it may not seem like the right choice, these boring stocks like Google, Meta, Amazon, they can give you crazy returns better than the crypto and the micro cap stocks, way better. Like just boring Google, just in 1 year, from 1 year ago exactly. Actually, I didn't even time the dip. From 1 year ago exactly, boring Google is up 153. I bought them a year ago. Not even exactly. I'm up 143. I bought them at an all-time high. I didn't even expect that, and I'm up 143% in just a year. And I haven't even owned Google that long, just about a year. So that's what's like. Right now, it's a tough time because a lot of things are at all-time highs. But you want to have these great companies on your watch list. What do you think of DYXZ? Let's check that one out, and then we'll get to MC said Fortinet. Wait, DXYZ, is that the Destiny Tech 100, huh? AMD, Roblox. Oh, let's do Roblox. Do you hate Microsoft? No, I love Microsoft. I have a open my brokerage, haven't bought anything. I'm confused. Hey, not Stephanie. That's awesome. I actually have a tutorial on how to use this app on my YouTube channel. I have a bunch of tutorials. I have a bunch of videos comparing all the brokerages as well. But yeah, by the way, I'm also streaming on YouTube. That's a best way to support me. Check out my YouTube channel. It's called Nathan Robert. It's the same thing. You can just type it into YouTube. But anyway, here's Destiny 100. I'm not sure what this is, but operates as a non-diversified management company. Okay, so it owns a bunch of stocks, basically. It owns shares in some companies. And I don't know exactly, but I think this company owns some SpaceX. I don't remember what it is exactly. Yeah, I wish I could give you real news on this stock right here. You know what? Let's go to their website right here. Maybe we can find it out. Destiny 100 is designed to be a portfolio of the top 100 growth tech companies Well, can we see what the portfolio is? Just like I thought, yeah. So SpaceX, if you buy this ETF or the stock, it's basically 16% of that goes into SpaceX, Shield AI, which I've never heard of, Beast Industries. And if you're thinking, is that Mr. Beast? Yeah, that is Mr. Beast's. He sold some of his company to what's his name? Tom Lee, and I guess they got some of it. So anyway, kind of cool. They have some OpenAI. That was like 4% of it. I don't know what Databricks is, but hey, yeah, MC, pretty cool. Thanks for telling me about that one. What was it? Applied Arista. Yo, Franklin, please give me the ticker symbol for that stock and we will check it out. I got you. Sorry. I'm not too sure which one that is. Hey, thanks, Stephanie. I'm actually going to give you a follow. Thanks for being so nice. All right. Just out of curiosity, can you trade SIVE? Yeah, let's check it out. So I think it's this stock right here. It's probably yeah. So actually this app has every exchange, OTCs. There's like so many options you can do. There's so many cool things, so many strategies you can do if you like options. I don't do options. I'm kind of boring. I'm the most boring person ever. You know, all I do is I own 6 shares. I don't do options or crypto, which you can get crypto in here as well. But yeah, and even just boring holding 6 stocks. I don't mean this to brag. I just like being fully transparent. Look at this. Just year to date, just since January 1st, we're up 73%. And all time, we are up 34,000 or 300%. I can't believe it. So if you're wondering, this is, if you look in the top left, this is called our buy and never sell portfolio, where once we buy a stock in here, we're never allowed to sell it. That's why we've done so well. Like Powell Industries right here, like our second largest holding, we're up 1,000%. And I've never trimmed a single share. You know, it takes some time and hands to do that, but I've never trimmed or sold a single share. I have other portfolios where I haven't done quite as well, like our Webull account, all-time profit and loss. We're up 23% in the top left there. Sorry, my phone's a little laggy right now, but yeah, we have some losers in here like UiPath, Sprouts Farmers, and some other ones. But anyway, some of my biggest regrets in the market have been selling out of high quality companies like Robinhood. I used to own 55 more shares. I sold it at 36 and it's 75 today. Like there's certain companies like Palantir, Tesla, or actually not Tesla, but look at Palantir right here. I sold this stock for a 30% gain. I sold it at $8.29 and it's 135. So I would have been up like 1,500% on that stock. But anyway. Oh yeah, check this out, our Roth IRA. This is our big winner. Someone just said something about Innodata. Yeah, Innodata, they're up 85% on the day, just in one day. That's like, if the S&P 500 does like 10% a year, that's like 8 years of S&P 500 returns. I'm shocked. So let's do, I have unfortunately nothing too good to say about Roblox. Let's do AX. I'm so behind here, but there's so many stocks I want to get to. I apologize here. Yeah, I was early on Palantir, but then I sold it out. That I was an idiot. I didn't know what I was doing back then. But all my mistakes have, I learned from them and I'm trying to be more disciplined. So, and that's why I made this portfolio to never sell. So here's AXT. Wow, check that out. They hit an all-time high today. Technically, even right now, they're at an all-time high. But let's see what they do. I actually don't know what this company does. So, oh yeah, I remember this company. They make the substrates, the raw substrates for semiconductor equipment, like literally for chips. So it's basically future projections that are really good. Check this out. In 2 quarters, revenue is going to hit 38 million. If we look at it right now, like it's never even been close to 38 million. It's never even been 30 million before. So there's just a lot of future growth that's being priced in. But I think at this point, it's kind of fully priced in. There's also probably some news I'm missing here. But yeah, dang, a $7 billion company. Wow, they're going to be profitable on that. So look, on this 38 mil of revenue, they're going to make 5.5 mil of after-tax net income. That's actually super impressive. Actually, I can see why they're momentuming up so high. It's not just momentum, it's real fundamentals. Here's their investor presentation. Maybe, I just clicked off it. I wanted to download the presentation. It doesn't, okay, you have to scroll down. I want to get like an idea of what they do. So they get gallium or something. I don't know. Gallium arsenide is what they... Anyway, you kind of get it. Some mineral used in semiconductor components, and a lot of these like rare earth minerals and semiconductor equipment are all in shortages right now, especially because of Micron. It's almost probably like a pseudo like memory shortage play. because the commodities are just getting way more expensive, like Micron. So I don't know exactly, but hopefully that was kind of helpful there. That is kind of cool. Stock said I'm up 600% on Rolls Royce. Yo, a lot of people think Rolls Royce, or when they hear the stock, they think of the cars, the high quality cars. But this is really an aerospace and defense company selling the most high quality jet engines. So check this out, 48% of their revenue actually comes from civil aerospace. Then another 23% power systems, and then 22% defense. It's a British company. They're headquartered, I think, in the UK. Let me double check. Yeah, UK, Greater London. So yeah, in all of the aerospace and defense stocks like Raytheon, Lockheed Martin, they've done pretty good because of all the war fears happening. So yeah, congrats if you own them. He's up 600%. You deserve that. Wow. Cameron said QQQ. I'm thinking long term. What's your thought? Absolutely. QQQ. This is the NASDAQ 100. It's kind of a tough buy today, but this historically beats the S&P 500. The S&P 500, I don't know exactly, probably does like 8% a year. This does 10% a year on average. Like it does slightly better because it's more tech heavy. Like here's what it does. If you put $100 into this ETF, $8.50 of that goes to Nvidia, $7.13 goes to Apple, $5.20 goes to Microsoft, $5 Amazon, and Google, Broadcom, Tesla. I approve of all these stocks. I would happily own all of these companies, and I do own most of the companies on that list individually. So if you don't at least own the S&P 500 or QQQ, you got to own some of those mega caps individually. Like you just gotta. You can't. The average retail investor and the average hedge fund cannot outperform the S&P 500 and the QQQ. So if you can't beat it, at least own it as a little bit of your portfolio. So when it does outperform you, you won't feel bad, even if it's just a little percent. Like at least do it a little bit. And no financial advisor or something will call you crazy for buying the S&P 500. Like I that's the best way to beat inflation. Stocks and the S&P. The market is on fire though, so it is kind of a tough to say buy it. Is this app free to use? Yeah, this is a free brokerage. It's where you buy stocks on and analyze stocks. If you'd like to get this brokerage, I have an affiliate link actually on my profile description. It's like my link or link in the profile description anyway. Or you can just type it into App Store. It's just a brokerage called Moomoo. But yeah, it's free. But if you deposit $100, you'll both get some free stocks. But if you just like to analyze stocks, it's a great app to do that as well. All right. Hey, what's up, everyone? Yeah, if y'all wanted the follow button, I stream every day. I try to. All right. Yeah, I'm streaming on YouTube as well right now. So I'm reading both chats. Don't worry. I made a big gamble yesterday buying big before earnings. Yo, what's up, Sagittarius? He says, thank you, dude, for introducing me to InnoData. I freaking love you. Yo, I'm glad you own that one, man. Yeah, you're right. Just today, they're up 82%. They're having a little healthy RSI retrace right now. But yeah, they had gangbuster earnings. They had a $50 million deal with Palantir, and that's going to add $50 million in revenue a year. And that's huge for, a company that was worth, only $1 billion before today. $50 million a year. That's nuts. All right, next, I'm so behind, so please forgive me for being so behind on the chat here. I'm trying to get to all these stocks here. Yeah, basically what we're doing, we're just analyzing all y'all stocks. You're one of the best at this, I've heard your knowledge. Hey, thanks, Kevo. I really appreciate that. Thanks for being so kind. I appreciate that. So here's Ametis. I've not heard of this company before, but you want to be very careful with these small caps. If you look in the top right, the market cap, this whole entire company is only worth $185 million. And it's just like, you work hard for your money. It's just really hard to trust, your money in this stock. You know what I'm talking about? California Ethanol, India Biodiesel, huh? And okay, so they did 54 mil of revenue and they lose 20 mil a quarter. So here's why this stock is done so bad and kind of there's a high bankruptcy risk here. Just kind of think about this logically. The whole company is worth $185 million and they lost 21 million this quarter. 5 mil the quarter before, 23 mil. So just in the past year, they've lost basically $100 million, which is half of the company. And not to mention, they are very leveraged. So I'm actually glad we looked at this. Like, this is a great example of financials. Like, this is a stock you don't want to touch because, like, we can understand why they've done so bad because there's real bankruptcy risk. They have twice as much debt. Remember, the whole company's worth $150 million. They have in current debt $340 million. So as you notice, they were losing $30-40 million a quarter. Every time they lose that net income, they have to pay that money off. So they have to raise debt. So the debt goes up every single quarter. And how are they going to pay off $340 million of debt when they lose 20 mil every quarter and the whole company is worth 185 mil, so they can't issue shares. So basically what I'm trying to say is definitely don't buy this one. Could be a fun, maybe like short-term day trade, I don't know, but definitely not a good long-term hold. Okay, let's go to Taiwan Semiconductor. Okay, Taiwan Semiconductor. Then we'll do. I live next to Rolls-Royce Nuclear. The buildings expanding are crazy. Yeah, I bet they're in such demand. We'll do. Hey, what's up, Ben? We'll do PH after this, which I think is Parker Hannifin. Then we'll do AppLovin and SN. How's it going, John and everyone? So here's Taiwan Semiconductor. This is one of my favorite stocks. So if you didn't know, Nvidia, they just designed their chip. It's Taiwan Semiconductor that actually manufactures them. Apple as well. Apple just designs their smartphone chips. Taiwan Semi manufactures them. Their number one customer is Nvidia. Their second largest customer is Apple, and they have the number one market share. And check this out. This is why the stock is going to continue to climb higher. Like on a RSI point of view, yeah, this stock is overbought, but here's why I expect them to just continue to climb higher. They only trade on a forward PE. Again, the forward PE is next year's net income. They only trade at 24 times next year's net income, which I think can easily stretch up higher to like a 28, 29, and send this easily to a new all-time high. And here's why they deserve a 29 forward PE, because of this growth. Organic revenue, not from acquisitions, just organic. Revenue's up 40% to 35 billion. On this 35 bill of revenue, they kept an after-tax net income 21.5 billion in net income, up 98%, which means their net margin is 60%. So, and look at the net income projection. So the growth is not done here. So this was already a record net income quarter. Next quarter, it's supposed to hit 19 bill and then 21 billion the quarter after. So 60% net margin. Actually, I think it's not updated right here. But anyway, they have the number one market share. They have a 71% foundry market share, making these 5.2 nanometer wafer chips, smartphone chips, Nvidia chips, all that. So, and you get a dividend. It's like Nvidia with the higher yield. You get a 0.8% dividend and only a 24 forward PE. That's actually a cheaper valuation than Nvidia, cheaper than Google, cheaper than Amazon. Not cheaper than Meta or Microsoft. I actually think Meta and Microsoft are some of the best big tech stocks to buy now. But yeah, Taiwan Semi, you get a really good dividend as well. So someone said Roblox. Oh yeah, hey, my bad there. Thanks for still being here. You know what Roblox will do after this, because I have something I want to say. Vinny, yeah, say Roblox again. We'll do that one after this. Here's Parker Hannifin, though. I actually forget what this company does. It might be an insurance company. I don't know. But this company is worth $111 billion. They've had really good stock price appreciation. Let's go see what industry they're in. Sorry, my phone's a little lagging right now. All right, let's see here. So profile. Okay, so they do specialty industrial machinery. Maybe we can go to their website right here. Parker.com is their website. Discover Parker World. It's an aerospace and defense company. That makes more sense. Looks like they're also in electronics and semiconductors, HVAC and refrigeration. There's so many secular tailwinds. So this company's in many good industries that I'm a big fan of right now. So no wonder the stock has done so well. I bet the financials are growing with that. So let's see. So diversified industrial and aerospace systems. How is the aerospace business growing? So that's up 15%. After grew 11, after grew 19, after grew 89. That's incredible growth. And their diversified industrial used to decline every quarter, but the growth is now back. The past 2 quarters, it's actually positive growth. So I can see why the stock's done so well. They're beating on net income every quarter. So the orange line is what analysts project the net income to be. And notice they beat for the past 3 quarters in a row. They did 904 million. So yeah, they're making close to $1 billion in net income. What's this right here? Is there supposed to be so it looks like they're saying they're in the power, cooling, and infrastructure industry, right next to Vertiv. They got Parker Hannifin in there. So I guess this is in the Google AI empire. Yeah, Google is now the second largest market cap. If you want to screenshot this, you can. But yeah, anyway, that's kind of the breakdown by industry. But yeah, Parker Hannifin, I think, has a good yield. Yeah, you get a 0.8% dividend, a very safe payout ratio. It only cost a 24% payout ratio. 29 forward PE might be a little expensive, but all the aerospace and defense stock trade expensive, like a Lockheed Martin and aerospace, or a Raytheon. I actually own Moog. It's a big aerospace and defense company. um, similar to Raytheon. So let's do Roblox. This is a Kathy Wood stock, and they have not done too well. They've actually done really bad, and we can actually figure out why they've done bad just by looking at the financials. Is there any specific news? Roblox, look at the third line. Roblox introduces Roblox Plus subscription for $4.99 a month. So, Hmm. They have some. This is the only impressive metric is their daily active users, and this is real. It's really impressive. Their daily active users are 144 million daily people. When 1 year ago it was only 85 million, so that is almost doubled in just a year. It's up like 80% in a year. I don't know if it's propped up on AI bots, but the bad news is the reason why Roblox is struggling in stock price is because of the debt and the losses. I guess just the people who play Roblox, the kids, they don't have credit cards. They don't buy anything. They can't buy this $4.99 per month subscription. So look at these net income losses. They lose, and the problem is actually worsening. They lost 15% more than they did last year. They're losing 200 to 300 million of net income a quarter. And the bad part is they're very leveraged. Look at the liabilities. It's almost the same as the assets. So how are they going to pay off 9.4 billion in debt when they lose an additional 200 to 300 million in net income a quarter? So the daily active users are impressive, but the profits are not. And that's why I believe this stock is struggling. And there is no forward PE. Like, it's hard to value this one. There is no forward net income multiple because they just lose money. So that's why I unfortunately am just staying away from that dip. Hopefully that kind of made sense. Uh, Other than fundamentals, do you look at technicals? I really don't. I really don't like RSI, Fibonacci retrace. Actually, I do like Fibonacci retracements. I don't really pay attention to that. I mainly just judge a company off its financials. Okay, next up I see um, Exxon and Chevron. Yeah, these are good to have as a small portion of your portfolio. That's actually a big Buffett holding. Let's actually go to the Warren Buffett portfolio. A lot of people know him for Apple, American Express, but Chevron is 7.2% of his portfolio. So 7.2% of his holdings are in Chevron, and another 4.3% are in Oxy Petroleum. But anyway, these kind of companies have really good dividend yields. If you buy Chevron right now, you get, and they raise it slightly every year, you get basically 4% of your money back in a qualified dividend every year. So you're getting 4% of your money back a year. Historically, these oil and gas stocks don't outperform the tech-heavy S&P 500, but you own it for environments right now and for its defense. Because whenever there's war fears, it's kind of seen as like a safe haven. Commodity inflation, oil does really good in those environments, in war environments. Like we just saw, like the Strait of Hormuz being shut down, messing up the oil supply, making oil prices go higher. So, that's why you don't want to have too much oil. Like, you own it for its diversification nature. You know what I mean? But in the meantime, while you just own this one as a small percent of your portfolio, you just collect crazy good dividends, 4% of your money back a year. And it might be a nice hedge if you think war is going to escalate more. Then Chevron, Exxon, these could be good hedges. They'll probably do good in those environments. Next up, we got, hey, if you have a stock, give me the ticker symbol, please. I see like Advanced Energy. I wonder what that one is. Oh man, Shark Ninja. I am really behind here. Yo, if I missed any stocks on YouTube chat, feel free to re-say them. So here's Shark Ninja. If you've heard of like those Shark blenders, those Shark coffee machines, that is this company right here, like kitchen appliances. They make really high quality stuff. So they own Shark, which is like a vacuum kind of business, but then they own, oh my goodness, Ninja. Okay. Then they own a bunch of kitchen appliances. Yeah, like these, like these advanced coffee makers. I'm at air fryers. But anyway, I think like blenders, you kind of know what I'm talking about. Where are they headquartered? Headquartered in Massachusetts. Okay, cool. They trade it not even expensive. I mean, it makes sense for kind of a consumer staple or discretionary, like an 18 forward PE. So they traded 18 times net income. So yeah, cleaning appliances are 36% of revenue, cooking and beverage appliances, food preparation, beauty and home environment appliances. And here's their bottom line. This is good. It's growing every quarter. This is their after-tax net income. This company makes 120 to 250 million of net income a quarter. Revenue's growing double digits every quarter. Wow, I'm actually impressed. Deleveraging their balance sheet. So, yeah, I mean, I have no complaints about this company. And it looks like they paid a dividend. Oh, that was in 2023. Oh my goodness, they're saying I'm AFK. So the stream just ended. Oh my goodness. Okay. Sorry if the stream ended right there. I had to fill out a captcha. But yeah, kind of cool Shark Ninja. They IPO'd not that long ago. All right. Next up, DGXX. All right, DGXX. We'll do this one. DigiPower X. Okay. You want to be careful because they are really tiny. They're only worth 444 million. Hey, remind me to do Zoom and SanDisk. These are some cool ones. SPUS. I'm behind here. I apologize. But DigiPower, they're worth $440 million. Any specific news? I guess here's some comments. I don't know. Secures transformational AI data center deal. I wonder what that was. Maybe there's some news I'm missing. Maybe that's why the stock, oops, clicked off it. Maybe that's why they rallied right here. There was no earnings this day, but they gapped up. I'm assuming it was some sort of news like that transformational data center deal, whatever that was. So what are future revenue growth? So future revenue expectations are not good. Revenue's going from 8 million to 6 million. So that's why you want to just be so careful with this stock right here. Like they do 8 mil of revenue a quarter. They have a really good balance sheet though. They have no debt. What are the net income losses? Dang, so they do lose quite a bit of net income a quarter. But I don't know. I would be just super, super careful. So cryptocurrency mining. So what I think this company does is it's kind of like a Nebius and Iris Energy is just really tiny. They own a bunch of graphics cards and they just mine Bitcoin with it, but now they're renting it out. Oh yeah, here it is right here. Data center agreement with Cerebus. Cool. So it looks like they're renting out their GPUs to a cloud company or something like that. Interesting. All right. Next up, but I'd just be, yeah, that market cap is just too risky. Yo, shout out to the member, Brian Paul, on the YouTube stream. I hope you're having a great Friday. He says Aiden, Adyen. Here it is. Okay, I think I found this stock. I think it's a European ADR. So let's see where they're headquartered actually. So they're headquartered in the Netherlands. Cool. So we'll convert their currency from euros to US dollars just to get a better idea of what the numbers are. All right. So actually, unfortunately, we don't get an income statement from them. Maybe they have it. It's just not updated on this app because they're a weird ADR. The only metric we do get is a balance sheet. So that's the only metric that's the only metric we get, which is funny. What is this right here? Oh, those are the shareholders. Okay. Yeah, let's see what they do though. At least I can maybe try and give you an idea of what they do. A financial tech company you can bank on. Oh, cool. Run your business with confidence. So it looks like they're partnered with like Spotify, McDonald's, a lot of cool S&P 500 companies. Maybe it's kind of like one of these things where they're like, hey, would you like to leave a 50% tip? So, okay, cool. So local payment methods. So there you go. Hopefully, I wish if you have a different stock for me, let me know, Brian, because that one I know probably wasn't too helpful there. Oh yeah, ServiceNow. Let's do that one. I did forget to that one. I do apologize. And then we'll do FCX and SPUS and Zoom. Oh yeah, Zoom. I keep forgetting these. My fault. I'm just so behind here. So ServiceNow right here, this is like one of the main software companies, one of the biggest ones by market cap. And looks like ServiceNow targets over 30 billion subscription revenue by 2030. AI to represent 30% annual contract. Cool. ServiceNow and AWS expand partnership after their marketplace transactions surpass 1 billion. Wow. ServiceNow and Accenture launch forward. Okay, let's go look at their actual numbers because that's what matters. The only thing that does scare me on ServiceNow is the net income forward PE because it might still be able to fall a little more. Like even though they're on like a 50% dip, they're not super. It's the cheapest they've like ever been, but they're still not cheap compared to this industry. They still trade at 42 forward PE. And I feel like that 42 could still fall to like a 38, a 36 before it fully bottoms. And that's the one thing that does scare me. So that's why I wouldn't go crazy buying the dip yet. But here's why I really am impressed with this stock. Every quarter, the revenue hits a new record. So this isn't just like, annual. Like this is every quarter, the revenue hits a new record. And they're super profitable as well. They're making a couple $100 million net income. So they're not a startup. They're already making $500 million net income a quarter. But they still trade expensive. And that's the one thing that does scare me. But there is a lot of good news around this stock. But at what platform? Yeah, if you'd like to get this platform I'm on, it's actually a brokerage where you buy stocks. It's actually on my profile on my I'm like, yeah, it's on my like profile description is what I meant to say. I have an affiliate link there. And it's called Moomoo, though. You can just type it into Google. But if you like to use my affiliate link, it's in my profile there, description. And it's free, costs nothing. But if you deposit $100, you'll both get like a free stock. And yeah, okay. Let's see. Oh, yeah. Wait. What was it? Zoom. Okay, Zoom. This one I do own. It's been one of my worst performing stocks ever. But they've actually had a really nice recovery because back in 2021, before Anthropic and Claude Code was a thing, oh, look at this. Here's the news. Zoom's Anthropic investment potentially valued at 2 to 4 billion. And guess what? They bought an original stake of $51 million. So from $50 million to potentially $4 billion, that's one of the best investments like ever. And the whole company is worth $32 billion. So roughly like 8% of the market cap is actually exposure to Anthropic. And that's one of the huge AI companies. Zoom was a genius back in like 2022 or something, had a partnership with Anthropic. And now and they also took a stake into them when they did that, and now it's really paying off. And what I love about Zoom as well is they have no debt. They have cash on hand, literally cash of $7.8 billion and no debt. So that's already, so the whole company's worth $32 billion. So already 15% of the market cap of what you're paying is just their net cash on hand. And then every single quarter, they just make an extra couple $100 million in net income, and they have investments in Anthropic. That's the cool thing. But there's kind of a no moat here. Like for the actual Zoom software, like Microsoft Teams, like Discord calling, like it's a total commodity. But yeah, check this out right here. I am down 28% on Zoom. I've been diamond handing. I want to see diamond hand. Look, my very first purchase was at 12/2021. So I've been holding Zoom for like 5 years. And I'm down bad. So, but it's too cheap to sell. You know what I mean? With all that cash on hand and that Anthropic stake, like it's just too cheap to sell. FCX. Okay, FCX. This is a copper play, one of my favorite copper stocks. If you're just bullish specifically on the commodity of copper, this is one of the best, if not the best, copper commodity stock. You get a dividend as well. So it's like exposure to copper with a dividend. So you get a 1% dividend. So 1% of your money back just in a qualified dividend every year. Morningstar says they're overvalued actually. While the company benefits from near-term record high copper and gold prices. So yeah, copper and gold are at record prices. Elevated geopolitical risk at its flagship Grensburg mine, higher input cost and slower than expected production ramp-ups require caution. So that's the one thing to be cautious about, but that wouldn't scare me too much out of this company. Only a 26 forward PE. Looks like they're in Indonesia, rod and refining, other segment revenue. Looks like they also are in a little bit into gold as well. And check out the bottom line. Like it's every quarter, just consistent net income. And if we zoom out, it's just consistent net income every quarter. Around, if we average it out, they basically make $1 billion of after-tax net income a quarter. So really quality copper play. FCX right there. SPUS. Okay, let's do this one. Yeah, try not to spam there. My bad. I know I'm behind. I apologize there. I appreciate everyone that's here. If y'all want to hit the follow button, I try and stream every day. What are you holding? How are you down today? Oh, hey, I'll show you. I actually am down today. I think between all my portfolios averaged. But anyway, here's SPUS. This is the Title Trust S&P 500 India exclusion ETF, or it excludes something. I know there's some S&P 500 ETFs that literally exclude the airlines, and the cruise lines because those historically just do terrible. They're so recession prone. So it like removes some of the bad sectors. But anyway, yeah, it just looks like a interesting S&P 500 alternative. It's performed, I think, slightly better, if not the same. And it has very similar top 10 holdings like Nvidia, Apple, Microsoft, Google, Broadcom, Tesla, Eli Lilly. Then it's Micron. That's interesting. Then it's ExxonMobil. Those have done really well. So maybe they have grown to that size position. But interesting. Actually, we're slightly green on the day. So here's this portfolio. Someone asked, I'll be super quick with this portfolio update. We're up 0.03% on the day. Coca-Cola Consolidated was down 2.9%. But anyway, if we go to our Webull account right here, At the very top, it is up 1.1% on the day. In all time, I love being fully transparent. No other streamers do this. I always like go and explore sometimes. Like no one's fully transparent, So we're up 23% all time in there. And then actually, the Robinhood portfolio. Oh, this is the account that's down on the day. So we're down 0.5% on the day. Or we're down $152. But here's what offsets that. Our Roth IRA, which is up 5.9%. We're up 5.9%, basically all because of InnoData, which just had gangbuster earnings today. I mean, just insanely well earnings. So, Ben said Mitsubishi MSBHF. Oh dang, I don't know if I can view that one. I typed it in. I think it's like a it's a weird ADR, so I can't view that one. I apologize there, Ben. Let me do Palantir. This is a great one. Yeah, Bucks boy. Let's do Palantir. And then we can do P&G, Adobe, Sphere. These are good ones. Yeah, we'll get to these next. So here's Palantir right here. One that as well benefits from all the geopolitical war conflict. Is there any specific news? Palantir. Okay. Let's go look at the actual numbers here because that's the most impressive part. And half of the revenue comes from the government. So many police stations, the military, the Air Force all use Palantir's government software. And check it out. It's up 76% this quarter. After grew 45, after grew 16. So the growth rate is growing. And this is organic. Like they didn't acquire a company. That's why this company is so loved. They genuinely grow like a beast, and not just their government revenue, but the commercial side as well. That I didn't even realize this grew 95% this quarter. After grew 33, after grew 25, so that's ridiculous. And look at the net income projections. Analysts expected 616 mil in net income. They did 870 mil in net income. Wow, if we just zoom out, it's never even been close. So record net income, and they have a fortress balance sheet with no debt, completely debt-free. And their cash pile just grows 8.3 bill of cash since they have no debt and they just make 800 mil in net income a quarter. They just retain it all. So I love Palantir. The only bad part is they're expensive at an 89 forward PE, but at the way they grow, they deserve a super expensive multiple because no other company in the market grows like they do. What app is this? Hey, this is an app. It's actually a brokerage where you buy stocks on called Moomoo. You can just type it into Google. If you'd like to use my affiliate link, it's actually in my profile. Kind of like if you click on my profile, the description, I have an affiliate link. But yeah, it's an app where you buy and analyze stocks. My favorite one called Moomoo. Okay, let's see. DRAM, DRAM. Is that an ETF? So this is the memory ETF. So if you're like, hey, I don't know which RAM stock to buy. Do I buy Samsung? Do I buy Micron or SanDisk? Well, this just breaks it all up for you. Yeah, it owns SK, it owns Samsung, Micron, SanDisk, Seagate. I'm assuming Western Digital as well. So yeah, that's crazy. That's they did that ETF just IPO'd. Yeah, an ETF is just like a basket of stocks, and that one specifically just invest in the memory shortage stocks like Micron, which are all at an all-time high today. And here's why I wouldn't even call you crazy for buying Micron or these stocks, because not financial advice. Here's why I think these memory stocks are going higher, which sounds crazy, but hear me out. Like this looks on a technical analysis super overbought, RSI overbought. But when we look at the fundamentals on a like financial point of view, look at this forward PE on the right, which again, a forward PE is next year's net income. They only trade at 7.9 times next year's net income. Here's what the net income is going to do. Here's the actual analyst numbers. Next quarter is going to be 21 billion in net income. And then the quarter after, 25 billion. It's never even been close to that. It was 13 billion this quarter. It's supposed to do another double. It's going to 25 billion. So that's what's being priced in, the future growth from this memory shortage. Micron's 2026 fully pre-sold. Wow, fully sold out. I think they have like a backlog into 2028. Like it's just ridiculous. So yeah, I was just looking at I just had to buy a SanDisk thing on Amazon, and it was literally like 5x in price. Gee, I think I have I was looking at this screenshot right here. Hold on here. Oh, there's no way I'm gonna find it now. Dang. Okay. Well, anyway, there was a specific screenshot, but It would take me too long to defeat the purpose. Okay, that's crazy. 80% in one day. Doesn't sound real. Yeah, dude, InnoData, that was ridiculous. They had a Palantir partnership that just had gangbuster results. Okay, I saw Adobe. This is one of the companies that are being hurt by the AI thesis, and I can kind of understand where they're coming from. It's not hurting their current numbers, but think of a 10-year out thesis. It's the thesis that's being hurt here. So they're saying in 10 years from now, will we need Photoshop? Because if the technology is so good, can we just AI generate in Gemini a thumbnail or a logo? My friend made an incredible logo on Google Gemini. Like, will we need Photoshop, or certainly will we need it as much? But I'm personally a believer that humans are always going to need the final touch on art, that final tweak, which will make Photoshop in demand. But I do still see it hurting this company in the future. So they currently are still doing great. Like, they're not missing on expectations. Matter of fact, they're beating on expectations every quarter. It's just, again, that future thesis. Like, check this out. They're printing money, 1.9 bill in net income a quarter. I mean, net income just hits a record every quarter. Yeah, here's we're removing those two one-time adjustments. This quarter was the most profitable they have ever been. How about the free cash flow? So 2.5 bill of profits. How about the free cash flow? 2.9 bill of free cash flow. So printing money, printing free cash flow. And what are they doing with all this money right now? They're actually doing major share buybacks. If you look at the top, they're spending like $2 to $3 billion a quarter for the past 2 years, solely buying back their own stock. I kind of wish they'd do like an acquisition or something. But yeah, basically it's just a bet. What do you think if AI is going to replace this one? Because they are really cheap at a 13 forward PE. Hey, see ya, MC. Thanks for showing up, man. I really appreciate you, brother. Do I follow you? I'm going to give you a follow if I don't. Yeah, I'm going to give you a follow, MC. Thanks for being here. You also watch out for people impersonating me. Just know I'll never follow you or DM you, or I sell nothing. I have no course book. I'm literally just on here giving my opinion. Nothing's financial advice. All right, next up, hey, what's up, McLovin? How's it going? Toe said VCX. What is VCX? Fundrise Innovation Fund. Oh yeah, this is it owns a bunch of private companies. Like, I think it owns SpaceX. Oh, we're not going to be able to view it. So I wish, actually, maybe we can view it over here. Well, I know we can view the Robinhood venture funds, so like RVI. It's basically the same thing. It owns like Databricks, I don't even know what, Aura Ring. But what was that ticker symbol? VCX. I think this is the one that owns like Anthropic and stuff. So VCX. It's not going to show me. I guess there's a short interest on it. Is it technically an ETF, or is it like a blank check company? I don't know. Anyway, I think it just owns a bunch of private equity stocks like SpaceX. All right, next up here, why isn't Neo making a big bull run like the others? Like the other what? Like, because the EV companies don't really do too well. So here's the thing about Neo. This is a Chinese electric vehicle manufacturer. And their SUV sales are soaring through the roof. They're just not getting profitable. That's the good news. They're just now getting net income positive. Like, if we zoom out before today, this company was a tough one to buy. They lose like 500 to 900 million, and this is in US dollars. We've converted it from Chinese yuan. This is in US dollars. They lose 700 to 900 million in net income a quarter, but this quarter they made 40 mil in net income. They're still supposed to lose 200 mil next quarter and then 100 mil the quarter after, but it's a good sign to see them actually narrow their losses with their sales growing, because sales are up 83% on their SUV deliveries. So, but there is no forward PE. So that's kind of the thing. It's kind of tough to value because there is no forward PE. Like these electric vehicles, it's a commodity. They sell for a very low net margin. And that's the issue with Tesla. That's why Tesla, in my eyes, is unbuyable. Just from a fundamental point of view. Like, it has great like a following, but this is the net income on Tesla. Here's the net margin. Tesla's net margin, 2%, 3%, 4, 5, 2. So Tesla's net margin has just declined, and that's the tough part. Tesla's kind of lost their growth. They used to make good money. Tesla used to make 2 to 3 billion net income a quarter. Now Tesla is higher in stock price and makes 60% less profits. So it's kind of funny. So the valuation's ridiculous on some of these names. Hey, what's up, Alec And I saw, can you tell me about Comfort Systems? This is an HVAC and MEP play. So basically, Comfort Systems, this is a basically data center infrastructure play. I'm a big fan. Instead of just buying Nvidia, buy the whole ecosystem. By the companies doing the HVAC work, which is the heating, ventilation, air conditioning. These servers will literally burn themselves down if they're not cooled properly. By the companies doing the MEP work, constructing them, all the complex mechanical and electrical work. That's Comfort Systems, Powell Industries. By the companies powering the data centers, which is, nuclear plants. I got Constellation Energy. They own 33% of all the US's active nuclear reactors. So by the companies selling the chips like Nvidia and AMD, by the companies even selling the chip components. So this is Amphenol right here. They sell the copper cables to Nvidia and Google. Google's TPU uses Amphenol. Nvidia does too, and they're down 4.3% on the day. I am shocked. Genuinely, that's weird. So Comfort Systems, though, they just had the best earnings ever. I'm up 430%. I don't plan to sell any or trim any shares of this company. Like analysts expected 240. They did 370. Like this stock is at an all-time high for a reason. Organic revenue grew 56%. So that's the highest growth rate on the whole screen. So revenue's up 56. Net income is up 118. That means margin expansion when the net income growth rate rises faster. So their net margin is up 39% year over year to a 13% net margin. Free cash flows are record. Gross margins up 20. They have no debt, $1 billion of cash. They raise their dividend every quarter, super low payout ratio. So they have a $12 billion backlog with $1 billion of cash and no debt. So they're just super impressive. My kind of fundamentals. What is BSX? Let's check it out. FNS, he says BSX, Boston Scientific. Oh yeah, then we'll do Sphere. What's up, Ishwar? He says holding Dell. We'll do Dell and Microsoft, Reddit. Oh, EU or EW. We'll do Reddit next. Please remind me. I love Reddit. I actually just bought some kind of recently. So Boston Scientific, man, they are having a crazy downtrend. Is there any specific news? FDA issues a recall for Boston Scientific Accolade pacemakers due to battery-related issue. Now, so expanding scope to 27 affected devices. So, the company reported 4 deaths. Dang. So they reported 4 deaths because of this and 2,500 serious injuries associated with the issue. So I can kind of see why the stock price is now falling. See, it's always good to have that context. Without that context, it would have been tough. That's why I like checking the news tab. So that is something you need to keep in mind. Dang, that's really sad. So they do some healthcare, something like cardiovascular products, med surge, whatever that is. So that is definitely something you want to keep in the back of your mind. So let me do Reddit. Sorry, I know I'm behind on all the chats. We're going to be live for a good another 30 minutes. So I'll definitely try and get to all these stocks here. So here's Reddit, and I do own Reddit. Let me share with you that. So I actually bought a share kind of recently when all the software stocks were dipping. Look at this. Reddit was no exception. Reddit fell from 260 to 120. And that's when I bought a share. I'm like, this is so cheap. I'm deciding to buy Reddit. A lot of people think Reddit is just some meme company, but this is a real growth monster. Check this out. I think this will surprise everyone because I don't know how they're pulling this off, but their new advertising business is making their ARPU, their average revenue per user, grow 40% year over year. And hey, watch out for those people in chat there again. I'll never sell anything. Okay. Oh, hey, Jello, thanks for helping me out. Yo, Jello, there's been so many. I've had to block 10 plus people today in the chat. So again, yeah, just know I'll never follow you, DM you. I sell nothing. Just on here, give my opinion. Nothing's financial advice. Okay, so check this out. Revenue is up 69% year over year. And check out all the green number at the bottom is the year over year growth rate. Like every quarter it grows 60 to 70%. But yeah, for the past 9 quarters in a row, revenue's grown 60 and 70%, but not just the revenue, but the net income as well. They're the most profitable they've ever been at $203 million net income. And another huge safety net takes a lot of risk off the table is the fact that Reddit has no debt. They have $2.8 1.75 or 77 billion of cash, zero debt. Because when you have no debt, you don't owe anyone any money. So when you make 311 mil of free cash flow and 203 mil of after-tax net income, you just keep all that money. And Reddit literally, I had a screenshot earlier. Their like total operating expenses for the quarter were like $5 million. Their gross margins, a 91% gross margins on Reddit. I mean, I can't believe this. Reddit remaining revenue. I want to see if I can find that. Reddit sets goal of 100 million daily US users. I wanted to find the. Huffman emphasized Reddit's lightweight operating model with Q1 capital expenditures of 1 million. 1 million of capital expenditures. You see Google, like Amazon, Meta spending like 50 billion a quarter, but Reddit's spending 1 million a quarter because they just collect royalties basically. And a lot of companies, they're training their LLMs on Reddit's proprietary data. They have such high quality data that LLMs are training their data on it. So anyway, I'm a big fan of Reddit. They have no debt and they only trade. Again, this is a growth company. You don't value them off current net income. You value them off next year's net income. Reddit legit only trades at a 27 forward PE. That's cheaper than Google, cheaper than Amazon, and they grow faster. Revenue's up 69, so revenue's growing faster. Margins are expanding faster. Margins are better. So I'm a huge fan of Reddit, but I am biased because I own them. So hopefully that was helpful there. Ooh, do you have a Blossom? I actually do have a Blossom. I don't use it though, and I don't really like this app. But if you'd like to follow my Blossom, it's not letting me do anything because I'm profile sharing right now, so it's not going to show anything. But I'm clicking my name in the top left, trying to show you my name. My Blossom's called Nathan Robert, if you can find it, same as my TikTok and YouTube. So SPHR. Has anyone heard of the Las Vegas Sphere? Or like those big spheres with a digital screen on it? Let me see if I can go to their website and find a picture for you. Because the Las Vegas Sphere was pretty cool when I was in Vegas a year ago. They have the coolest entertainment. Yeah, like the inside of it is cool. I want to see a picture of it from the outside. Here's their investor relations right here. I don't want to go to their investor relations. I kind of want to just find a picture of their facility from the outside. Anyway, basically the best kind of movie theater you'll ever go to. So let me actually go to the fundamentals here. Let me actually check out the future projections here. So they do have good revenue. Revenue is 300, 250. Oh my goodness. Hey, Lorenzo, I try not to spam there. Thanks for for sharing the live. Look at the revenue right here. I don't know if y'all can see this. Look at the whole chat has been okay, so I don't know why the stock has rallied so much. I genuinely don't know. Like the stock is like just kept on climbing higher. They're still struggling with profitability. I wonder, the net income projections aren't amazing. So I don't know. It's just some entertainment kind of almost like a really good movie theater. So what's up, JVM and Silver? Said Zoetis. So Zoetis just reported earnings and they lowered their net income guidance by 10%. So yeah, dang, look at this. If you're wondering why did this stock just tank? Well, did they show the news? They lowered their EPS guidance by 10%. It went from like $6.80 to $6.30. Which was like 60 cents, which is a 10% EPS decline. So they're very cheap. I mean, wow. Their forward PE is a 12, so they trade at 12 times net income. They do animal healthcare for livestock and pets. So if you ever seen like a cow with like that big white like circle in its ear, that's to keep parasites off. So they sell parasiticides, they're in vaccines, dermatology, anti-infectants, all for pets. None of this is humans, pain and sedation, and they're very internationally diversified as well. US is 53, then other emerging markets. So kind of cool. And they let's see what they reported. So yeah, look, analysts expected 2.3. They did 2.26. They expected 657 of net income. They did 601. So they did have a pretty big miss. So it's just not good to see kind of the growth kind of going away, but they still print money. Like, look, they still, even though it was a bad quarter, they still made after tax 601 million in net income. And you get a 2.5% yield, 33% payout ratio. So I don't know. It's a pretty decent healthcare company. It's just the growth is being questioned right now, and we definitely want to see the growth come back. Here is a phenomenal data center stock. And oh, Trevor, hey, remind me after this to get to LPTH Lightpath. Yeah. And what's up, Luffy? Buy the APH dip. I think it's a good one to dollar cost average on. Yes, sir. So here's Arista Networks, a great AI infrastructure stock as well. And you'll be impressed. I'll just show you the numbers for yourself. This is what I think is great. Look at the revenue. If we just zoom out, the revenue is at a crazy record. It basically hits a new record every quarter. And not just the revenue. So we know the actual sales are growing, but what about the profits, the net income? Check this out. After tax net income this quarter was just over $1 billion. For the first time ever, they had $1 billion after tax net income quarter. That's incredible. So they're printing $1 billion in net income a quarter. Really good balance sheet. Oh, and the free cash flow is just as good. They have a net margin of 30 to 40% net margins. So Arista Networks, really impressive. Where's their sales come from? They're just a little expensive, yeah. So even on the dip that they're experiencing, the tough part is they're still at a 39 forward PE, which means they're trading at 39 times next year's net income, but they deserve to trade at an expensive multiple for that quality growth. So y'all know Dell. A lot of people, when they think of Dell, they think of those old like desktops, Dell PCs, whatever. But they're now getting into data center infrastructure, installing server chips and doing the server racks for you. And it's really successful. This is like a value stock where even though, look at this, Dell's at an all-time high, up 9%. Here's why I believe they're just going to continue to climb higher. Basically what I'm trying to say is don't fully sell out of this stock. Don't trim this one. They're probably going to go higher. Look at the forward PE. It's a 21. This forward PE, I just feel like can stretch up to a 25 pretty easily, like a 25 forward PE, and it wouldn't even be that overvalued. Here's why I think they deserve a 25 forward PE, because the growth is finally here. If we go to their infrastructure solutions, which is that data center infrastructure, it grew this quarter at the very top as the year-over-year growth rate, 72%. Last quarter it grew 24, 44. So it's the highest growth rate on the whole entire screen. And also their client solutions, how's that grown? Okay, it's actually this is also the highest growth rate on the entire screen. It's up double digits as opposed to being negative or single digits. It's up 13% year over year. So it looks like the growth is finally back, and that's in the net income as well. Net income was $2.26 billion. It's never even been close to that. $2.26 billion. They have a dividend as well, a 0.9% dividend yield, and they do share buybacks. Here's how you can easily tell if a stock has bought back their own shares. The net income growth rate is up 47%. So the net income's up 47, but the net income per share is up 56. How does the net income per share grow faster than the net income? It's because of the per share part of the ratio. They've bought back like 10% of all the company just in the past year, which makes the EPS grow faster, makes the dividend cost less, gives you more ownership in the company, and basically it just forces the stock up. And it's worked out. They're at an all-time high today, so congrats if you ever own them. And a lot of these semi plays are at all-time highs. One stock that I own that's at an all-time high, like the only green stock basically on the day for me, has actually been AMD. Check them out, up 8.3% on the day. I just can't believe it. They're at a 85 forward PE. A lot of these stocks are really pricey where you don't want to buy them at current prices. But Dell, that one is one where like the cheap forward PE. Kivo said Oklo. I would be careful with Oklo just simply because they're super far away from any sort of revenue and profitability. Expected EPS loss, revenue of $0. So there's just no revenue anytime soon. I think they said their first nuclear commercial or just their first nuclear reactor is supposed to come online in 2030. So yeah, here are the analyst projections, just it's $0 because they're a startup. This is a startup, and it's just tough to trust a lot of money in startups when they have no revenue. It says no data right here because they've never sold anything, and they just lose a lot of net income every quarter. So for that reason, I actually would not buy. Or if I'm looking for the best nuclear stock to buy and never sell, I really wouldn't want to buy the one with no revenue yet and not going to have any revenue anytime soon. I want to buy the one that has a lot of active reactors, and that's Constellation Energy. They actually own over 30% of all the US's active nuclear reactors. I do own this one, so I'm totally biased, and I end up a good chunk on them, but I own them for a reason because I've looked at all the nuclear stocks and all the utility stocks because I want to own the companies that power the data centers, and I like nuclear. I love nuclear industry, and I found the best nuclear stock is Constellation Energy. Um, a second place would be like Vistra Energy. I think they own like 6 reactors, but CEG is the best with the most reactors in the US. I think Berkshire Hathaway Energy, which is part of Berkshire Hathaway, has some as well. Oh yeah, Poet stock right here. They lost a deal with Marvel Technologies. Whoa, they recovered. I remember this day. They fell 55%. They went from $15 to $7 in one day. But it's good to see they've recovered. So yeah, Poet Technologies faces Marvel Semiconductor cancellation of all celestial purchase orders due to alleged confidentiality breach. Whoa. That's but it looks like they got a separate $5 million purchase from another company. So I guess that's not good. But they are recovering on the day. What are their current sales? So, they have no revenue right now. So that's the tough part. So this is kind of like a startup as well. If we go to revenue, I mean, the past quarter they only did 300,000 of revenue, 300,000 a quarter before, 260K. And I guess revenue projected next quarter to be 250K. And then 970K, but it's just, definitely a tough one to trust. I think they're selling some sort of semiconductor optical communication equipment. I maybe find a different one but there is a lot of volatility around that one right now, and it could be fun to like short-term swing trade, day trade. Like for some stocks, like even though the financials are bad, they could still be good for you personally to swing trade or day trade, something like that. Like if you see a technical something. Wow, Intel just continues to win. I don't know what's going on with Intel. Apple and Intel reach chip making agreement. I predicted that. I mean, that's crazy. Part of the way, so I was saying this a couple months ago, Apple promised to spend hundreds of billion dollars on the US. And same with all these other companies like Nvidia as well. They promised to spend like $100 billion in US infrastructure to avoid tariffs. And part of the way Apple is doing that is moving some manufacturing away from Taiwan Semiconductor to Intel, to US fab manufacturing. So, all right. I'm so behind here. Thoughts on CLS? This is Celestica. This is a cool one. They are another crazy AI infrastructure stock. And this is a sector I'm really bullish on. But unfortunately, all these have gone up so much, it's hard to buy. But let's see. Celestica reports Q1 revenue. The revenue surges 53% to $4 billion, driven by AI infrastructure demand. Yep. Secures hyperscaler optics program. So congrats if you own this company. Yeah. Connectivity and cloud segment grew 78% year over year. That, they deserve all this stock price appreciation because the fundamentals are growing with it. So yeah, their connectivity cloud solutions, which is 80% of the revenue, grew 80% year over year. So yeah, if we just zoom out, just boring revenue right here, revenue's at a record. So record revenue and record profitability as well. Yeah, look at the trend of that. Just over time, the profits just continue to climb higher. So look at the margin expansion. This is what I like to point out. So the revenue grew 52. So revenue's up 52. Profits are up by 101, which means margin expansion. Pretty cool. Wow. No dividend on the company, but yeah. I wonder why they're not green. A lot of AI stocks were green, but I don't know. Cool. Yeah, 37 forward PE isn't even like crazy expensive either. Hey, what's up? Earl said EVTV. EVTV. What is this one? We're actually not going to cover this one, unfortunately. If you look at the top right, they're just too tiny. You see, they're only worth $27 million. It's just like you don't want to trust any money in these really small micro caps. If you're going to trust your money in a stock, like if you just want to buy a stock that's technically oversold, that like is down on a dip, I recommend buying stocks that are on a dip with good fundamentals and not ones that are like have real bankruptcy risk here. So yeah, 23 mil market cap, just Don't buy that one. Can you look at DRAM attractive ETF? Yeah, basically this is the memory. Yeah, we covered this one a minute ago. This is your memory shortage ETF. So if you don't know whether to buy like SanDisk or Micron, this ETF or Samsung, this ETF breaks your money up into all the different top memory stocks for you, selling RAM. Samsung, SK, Micron, SanDisk, Seagate, so Western Digital, all the best ones. Someone said thoughts on Nokia. Yo, Nokia, I believe that's owned by Nvidia. So yeah, Nvidia is so big, they literally own some individual stocks. So yeah, if we go to the Nvidia portfolio, they own Intel. That's part of also Nvidia's way of investing in the US as well by buying Intel and moving some of their old chip manufacturing to Intel. They own CoreWeave. And yeah, 6% of their portfolio is in Nokia. Bang said what happens is, yeah, if you'd like to get this app or this is a brokerage where you buy stocks on, it's actually in the link tree or actually the link in my profile. If you click on my profile, it's like link in the description there. It's an affiliate link. So if you go and deposit $100, we'll both get like a free stock, but it's a completely free app. You don't even have to deposit money. You just like analyze stocks and stuff. And you get a nice like 3.35% APY. But back to Nokia right here, Nvidia owns some of this. And ever since, that was back down here, ever since Nvidia bought their stake, the stock has been up ever since. And they actually have good net income projections. If we go to the S&P Global Analyst, next quarter, net income is going to be $260 million. Net income the quarter after is going to be $390 million. So they really do make a couple $100 million of after-tax net income every quarter. Nokia, when you think about them, you think of the smartphones, but they're not a smartphone company anymore. Here was the year 2000. They lost the smartphone war to Apple. In the year 2000, it was a $55 stock. It's a $12 stock today, but they've completely changed the business model. Here's what Morningstar has to say. Sorry, let me get my water here. So optical networking demand provides a new growth avenue, but the increasing commoditization of mobile equipment and the disruptive threat of open ORAN technology requires significant caution. Well, there you go. There's the don't know exactly what that is, but I like that they really do make a couple $100 million net income, but they're expensive. All right. Next up, oh yeah, BlackBerry. Hey, what's up, Matt? Yeah, BlackBerry, Nokia, kind of the same thing. BlackBerry has transitioned, just like Nokia, away from like getting into smartphones. To BlackBerry is actually this. Okay, I'm gonna have to reset the app real quick. They have transformed into this automotive software company and actually hold the phone. They have like done really good this past couple, or ever since earnings, they've just been straight up. I wonder if there's any specific news. BlackBerry receives stock exchange approval to renew share buyback program. Okay, so they're buying back shares. BlackBerry reports fourth consecutive profitable quarter with a revenue of $144 million. QNX powers 275 million vehicles. Okay, so yeah, this QNX automotive thing powers 275 million vehicles. That's a lot. Okay, let's go look at their actual numbers though and future projections, because I would be curious to see how the analysts are feeling. Yeah, look, they gapped up on earnings. No wonder. Analysts expected them to do 144. They did 156. And if we go to net income, analysts projected them to do 19 mil and they did 24 mil. And they're supposed to do 11 mil next quarter, 15 mil the quarter after. So I like that they're finally going to be making consistent net income, because it used to be tough. It used to be a hard buyback here. They were losing net income every quarter, but now they're in an environment where they're actually going to be making like 10 mil plus of net income a quarter. So probably expensive though. Yeah, a 43 forward PE is expensive, but it's interesting. Hey, what's up, Sash? How's it going? Yeah, hey, if y'all are enjoying the stream, please leave a like for me. That's the best way to support me. Yeah, watch out for people impersonating me. I sell nothing. Oh, I saw Meta and SoFi. Hey, Jan, remind me to get to Meta after this stock. I want to do SoFi. I saw that one. Hey, what's up, Daniel? And then we'll do Meta, and then we'll do Caterpillar. The McDonald's CEO hurt the stock with his big arch viral burger. Yeah, exactly. Actually, I want to talk about the food industry because it's actually an industry problem, not just McDonald's. But here is SoFi Technologies, one of my favorite fintech stocks. And full disclosure, I do own SoFi. So I might be biased, but I do own SoFi for a reason, and that's because they have just really good growth. It's a growth story that I buy into. If we go to their financial services right here, this is what has blown away all expectations. Like for the full year 2020, they did 11 mil of revenue, And now for the full year 2025, it was 1.54 billion. The quarterly data breakdown looks even better. It's up 78% year over year. After it grew 85, after it grew 142, after it grew 288. So just every quarter the record revenue. And yeah, we can just zoom out and see that in the revenue. This is why it's a great growth stock in my opinion. Revenue just hits a record every quarter, and not just the revenue, but the net income as well. They made 166 million net income, and that's why I think people are taking SoFi serious. And the net income projections are good too. They're supposed to make 240 million in net income in 2 quarters, and it's never even been close to that before. So I'm really excited for the future of SoFi. And this is a growth company, so you don't really value them off a current or a TTM PE, which is trailing 12 months. Since they trade at 35 times net income, you want to value them off next year's net income. And SoFi only trades at 21 times next year's net income. That's why I think they're a good buy, not financial advice, but 21 forward PE is just like genuinely cheap. So let's do Meta. Heck yeah. This is another one that I like. The stock has been flat for 2.5 years now. So one thing being questioned is how much they're spending on AI, but that doesn't scare me out of Meta, or I'll just pull that up right here. If you go to their cash and investing activities, they spent 33 bill this quarter, 34 bill the quarter after. That's more money than they're making. Here's net income, or actually I should pull up operating profit because they had a one-time adjustment the past 2 quarters. But look at this. Every quarter they're making 22 to 25 billion in profits. And they're spending more than that now. So basically, they have now a net debt position for the first time ever because they're spending a couple billion more than they're making every quarter. And they need to spend on AI to not get out innovated. But I'm not being scared out of Meta. The revenue growth, it's paying off. The sales was better than Amazon, Google. The sales grew 33%. That's the highest growth rate they've had in a really long time. Their ARPU for Facebook, they make $50 per user per year from each Facebook user in the US. They own Instagram, they own Threads, they own WhatsApp, Messenger, and they're just now introducing ads to Threads and Messenger and WhatsApp, which is a nice tailwind for the net income. And they're getting into robotics. Check out that third line. Meta acquires humanoid robotics startup, Assured Robot Intelligence for Super Intelligence Lab. Pretty cool. Anyway, I love what they're doing with the Meta Ray-Ban glasses. I love their apps. It's like the best social media stock. I wouldn't buy Snapchat stock. I wouldn't buy Pinterest or Yelp. I would buy Reddit, and I would buy Meta. Meta has 3.54 billion daily active users, and the valuation is like genuinely cheap. They traded only a 19 forward PE, which means they trade at 19 times net income. Pretty cool. So yeah, if you use Facebook and Instagram, why not own the app? And you get paid a dividend. They do share buybacks. They do acquisitions like those robotics companies. It's just a great growth company. Which platform are you using? Yeah, hey, DJ, it's actually, I see you're on YouTube. It's actually the first link in the description. So yeah, if you go to the YouTube description, it's a brokerage actually called Moomoo where you buy and analyze stocks on. It's my favorite brokerage. And if you're on TikTok, it's in my profile there for this app. It's an affiliate link too, but you can just type it into Google or the App Store. It's a brokerage called Moomoo. Yeah, if you use my affiliate link, it's in the description. Hey, what's up, Seths and Mo? Will you buy McDonald's at this price? Absolutely. So I wanted to talk about the food industry. McDonald's has actually held up a lot better than all their competitors. So check this out. I am now down on McDonald's. I'm down 1.57%. But here are the buys I've been doing over the past couple of days. I've even been buying fractional shares. Like I bought just $40 worth, $30 worth. Then I bought a whole share at $2.90, and it's at $2.70. And that was just a couple of days ago. So let me show you first their competitors. Look at Wendy's. Oh my goodness. RIP Wendy's. Wendy's stock is the same price as they were back in the year 2006. So Wendy's, RIP. Jack in the Box, it's like another kind of fast food QSR restaurant. They're the lowest they're lower than they were technically in the year 1999. Holy smokes. And then there's also or even like the food staple companies like General Mills, the packaged goods. General Mills stock, look at this, is just over the past year, they're down 50%. So there is, in specifically food, a huge recession in this whole sector. And McDonald's luckily hasn't fallen as much, but it still definitely has fallen. And why McDonald's is different and is special is because they're uniquely positioned, because They're not like those other companies. They're really a real estate and royalty company with their franchise model. 80% of all the McDonald's stores are franchise stores, and those franchises have to pay rent. The main corporation, this stock owns the land under 80% of all the stores, and each franchise pays rent back to the parent company. They actually have in the top 5 most valuable real estate portfolios in the world. So it's really a real estate company and also a royalty they collect. So McDonald's, the corporation, does a ton of advertising that all the franchises benefit from. So each franchise has to pay on every single sale a 4 to 5% sales and marketing royalty back to the corporation. So this company has margins not like a restaurant, but like a great company with 30% net margins every quarter. No restaurant runs like that because they're really not a restaurant. So that's why I think they're a bit more defensive and resilient than like a Wendy's. So yeah, they're actually like my 3rd largest holding. Let's do Caterpillar. I forgot about that one. My bad there, JVM. Let's do Caterpillar. Yeah, no problem there, Jan. Then we'll do RXT. Oh, I'm so sorry. Yo, Big Mike, he said, should I sell my AMD? I would not fully sell out of AMD, but I wouldn't call you crazy to sell less than 10% of your position. 10% of your position or less, you should trim it as just sell only a small percent. Definitely don't fully sell out. And just to make you feel better, because they are extremely pricey. It's not a price I would recommend people buy in at AMD. Do not buy in at this price. But yeah, 85 forward PE. I wouldn't be shocked to see it continue to climb higher. Like Intel, AMD are going to the moon right now. But it's definitely a tough time to buy. But would make sense to trim just a slight bit. Yeah. Actually, I just trimmed a little bit of AMD. So you'd be doing the same thing as me. I sold exactly 10% of my AMD position. Not selling anymore though, and certainly not selling anything in this account because this is called my buy and never sell portfolio. But anyway, let's talk about Caterpillar. Caterpillar, think of those heavy machinery or heavy machines like the tractors. For construction, data center construction and onshoring of manufacturing back to the U.S. has led the construction industry to boom, and Caterpillar's booming. Power and energy sector, and also the resource industry. So mines, we're trying to be more rare earth mineral independent. So Caterpillar is selling a bunch of big heavy machinery for mines and mineral projects to the US and Canada. But look at how they're beating on earnings. So Caterpillar isn't just gapping up for no reason. They're gapping up on earnings day because the earnings are so good. The orange line's what the analysts expect. They expected in revenue 16.4. They did 17.4. Every quarter they beat by a huge chunk, and not just on revenue, but after-tax net income as well. Analysts expected 2.16 of net income. They did 2.55 of net income. So no wonder the stock is doing so well because they're crushing expectations. You get a good dividend, a 0.67% dividend yield. They raise it every year faster than inflation. What's your portfolio right now? Well, here's my portfolio. This one right here is called my buy and never sell portfolio, but I also have multiple portfolios. Like, check this out. If you look in the top left, this is called my dividend only portfolio, where every stock in here pays a dividend. These are all like S&P 500 names, like Google, McDonald's, Meta, Constellation Energy. I have a Roth IRA as well. The Roth IRA is up 5.8%. I couldn't believe it, but InnoData is up 82%. Pretty nuts, actually. I don't know if I've ever owned a stock that goes up just in just a one-day move like that. So let's keep going here. M8 said, you think UPS will fall out because of Amazon? Actually, UPS disclosed that 15 or it was something in the teens, like something like 15% of all the revenue was because of Amazon. Amazon launches, UPS fell huge on this day right here. So this wasn't because of earnings, this was because of Amazon. So Amazon launches supply chain services, opening logistics network to all businesses, which is in exact direct competition with UPS and FedEx. Insane. And also with like a JB Hunt, like heard of a JB Hunt or a CH Robinson, it's direct competition with them as well. UPS to record $1.2 billion in separate cost under driver choice program. What does that mean? The majority of these costs is related to payroll taxes. This represents a significant workforce adjustment. I wonder if it's like unions or something, but here's the tough. UPS is kind of like a dividend play. Like you kind of buy it to maximize your income. If you like UPS or its actual business model for shipping and all that it does, low key, you would be better off buying actual Amazon. But yeah, look at this, a 6.5% dividend yield. Here's what scares me. They actually cannot afford that dividend. Look, this quarter, they made 864 million net income, 1.3 bill this quarter, 1.28 bill. So if we average out the 4 quarters, they make, actually last quarter was kind of an adjustment too, but they make 1.3 billion of net income a quarter if we average it out. And if we go to how much their dividend cost, every quarter UPS has to pay 1.35 billion in dividends. That's the number at the top, the exact number from the cash flow statement. I like deep diving into the numbers. So their dividend cost exactly 1.35 billion. If we average it out, like they couldn't afford it this quarter. They could afford it last quarter, but they couldn't afford it the quarter before or the quarter before or the quarter before. So I'm just worried about the dividend payout ratio. And growth is kind of gone. If we just go to revenue right here, organic revenue, lifeblood of the company, the sales, look at this. It's all declines for the past 4 quarters in a row. Negative 1.6, negative 3. But that, that's also like why the stock has done so bad. Like this isn't like breaking news for anyone who's been in the stock for a while. Like that's why they've done so bad, but it's just a tough one to buy in my opinion. Like I would rather own Amazon, and I do own Amazon. And that's what's so cool. Amazon is literally an ETF in one. It's like a UPS in one. It's a Walmart in one because it owns Whole Foods. It's a subscription play, AI play, data center play, satellite play, robotics play, your cloud, number one cloud play, advertising play, e-commerce, book play. Their AWS does 130 bill a year. I mean, Amazon owns 20% of Anthropic. They own 7% of OpenAI. So that's their exposure. Yeah, look, Amazon invests a 15 billion additional in OpenAI Series C and commits additional 35 billion. AWS to offer models like Amazon Pharmacy to offer Novo Nordisk oral Ozempic via same-day delivery. Wow. So they're like a Hims and Hers in one, if anyone heard of Hims and Hers. So you can't out-innovate Amazon. Amazon's famous model is like, hey, if a company has a net margin and no moat, your net margin is what we strive for because we're going to just do exactly what you do, but do it cheaper. And that's their whole model. So if we go to Amazon's cash from investing activities, this is the market cap of Comfort Systems and huge companies. They spent $64 billion just this one quarter. Investing in new assets. This could be investing in a company, buying new land, buying new assets, data centers, chips, whatever. You want this to be negative. If this number was positive, that means they're actively selling out of their own assets. So for money, which would be bad. So that's kind of one thing being questioned though on the Mag 7 is how much these companies are spending, because $60 billion just in one quarter and going to continue to do 50 bill a quarter is ridiculous. And that's spending more than they're making. Japan said, thoughts on UMAC. Which IPOs do you think have big potential? I don't know what's actually IPOing recently. Actually, I think I can check like IPOs. Or actually, let me check something on this app really quick. Markets. Yeah, there's a lot of cool like industries you can like search through. IPOs. Okay, here I guess to be listed. FRVO. Yeah, see, I don't know what any of these companies do. Blackstone Digital Infrastructure Trust. Oh, Cerebus. Cerebus Systems. I feel like I've heard of them. True Shrimp Company. Yeah, see, yeah, so basically to answer your question, nothing's really interested me, but those are the, I guess, recent IPOs. So here is a space stock, Unusual Machines. They do the launches for like the Artemis space mission. Unusual Machines places 75 million inventory orders with U.S. suppliers for NDAA-compliant drone components. What is the industry change? So drone concept stocks. Maybe I'm wrong about what they do. Let me go to their website right here. Okay, no. Yeah, decline all cookies. Okay, so I'm trying to figure out what they do. Is there any like investor presentation? I'd love to click that. Yeah, can we view the investor presentation? So here's their investor presentation. I guess here's what they actually sell. Components like this, maybe circuit boards, flight controllers, electronic speed controllers. Let's go see what their actual numbers are. I guess those are their brands. Okay, so I normally don't look at they have 18 employees. So, just be 18 employees at the company. And Morningstar says they're reasonably valued. While the company demonstrates impressive revenue growth and recent strong market momentum, its severe lack of profitability, deteriorating cash flows, and an absence of an economic moat pose a long-term risk that should require caution. So yeah, looks like they're getting their first ever revenue now. It's like before today, the revenue was 2 million a quarter. This is their highest ever revenue quarter ever, 4.9 million. Now let's go check out the future projections. And yeah, they're losing a lot of net income every quarter, but let's see. Wow. Yeah, revenue is going to go from 2 million to 7 million. So yeah, you're basically buying this company as they're converting from a startup to now doing like 50 million in revenue a year. Cool. But, there is no forward PE. They're worth $600 million. It's just such a tiny company. If you like them in aerospace and drone parts, you'll love Moog. Their patented systems have been on every single significant space launch in history. So I'm trying to think of the name of that popular satellite. That's the Voyager spacecraft, the one that's still out there, uses Moog's patented systems. The Artemis launch that just happened uses a bunch of their patented like valves and stuff. Okay, let's look at some more here. Me too. I'm down about 2 more chairs. Hey, what's up, Mo? Yeah, McDonald's is rough. Furtive says MELI is being fun. That's like your international Amazon stock, if I remember. We'll do GEV. Do you think GEV will go back down anytime soon? Yeah, all right, bet. We'll look at GEV after this. My bad, I missed that one. Dang, yeah, MELI is down 12% on the day. This is like if I believe they're a Brazilian/Mexico Amazon. And Amazon literally, like the day Amazon announced they're doing a 1 to 3 hour delivery service in Brazil's top 10 largest cities, they tanked like 10% on that day when there was no earnings. So check this out right here. Yeah, so 52% of this company's revenue is Brazil, then it's Mexico, then Argentina. So yeah, basically South America, Amazon, because yeah, they do commerce services, commerce product sales, and then they also do financial services. They have a little fintech business as well, which is pretty cool. I've always been impressed with the top line growth. It's insane. The revenue hits a record every quarter, so there's no issues with the revenue. But there is an issue with the margin right now, and the valuation's a little pricey. So the revenue is up 44, but the net income is down by 12. So revenue's up, but net income's down. What does that mean? That means margins are declining. Their net margin went from a 10 to a 6%. So for the past 3 quarters in a row, there's been kind of a deterioration in their net margin, I think, as they're really competing with Amazon. So that's one thing I guess you got to be careful with. But that top line growth is phenomenal. They're still profitable. They're still making 500 plus mil in net income a quarter. It's just, look at the expectations. They missed on net income projections for the past 3 quarters in a row. But, I like this niche market though. Like maybe Brazil will grow faster than Amazon will. But yeah, if we go to the forward PE, even on the dip, even right now, they're at a 38 times next year's net income, which is more expensive than Amazon. They're actually quite a bit more expensive than Amazon. And no way, dude. Bucks Boy. Oh my goodness, with the crazy super chat. Yo, dude, thank you very much, Bucks Boy. If you have a stock you want me to look at, let me know. You just made my Friday. Wow. Dude, thanks, Bucks Boy. Yeah, if you have another stock you want me to look at, definitely let me know before I get out of here. I've been streaming for over 2 hours now. This has been fun. I just do this for fun. And yeah, if y'all want to hit the follow button, like button, I stream every day. I sell nothing. None of this is financial advice. Just under give my opinion. UMAC is said to be the picks and shovels on new drone manufacturing. Oh, cool. So let's do GE Veranova. This is a cool one because they make, well, I'll start with the context. Under every single data center is a backup generator because if the actual electricity grid goes down, these data centers cannot afford to be down. So under every data center are these 2 backup diesel generators, like turbine generators, and they're primarily now made by GE Veranova. Or I guess here's what Morningstar says. GE Veranova says they're reasonably valued. Its leading position in gas turbine markets and strong tailwinds from the multi-generational electrical supercycle will drive long-term value growth. So that's what's so cool about this company. Yeah, you won't believe their backlog. I think it's like $200 billion backlog. I don't know if I'm going to be able to find that number here. No. But I'm so serious. They actually have a two or $300 billion backlog, which is crazy of orders. So whenever you have that future order book, that's just like so much stability into the future. It gives you so much like good stable guidance. So yeah, they're the most profitable they've ever been, and but it's tough at a 55 forward PE. But pretty cool. It's very small dividend yield. But yeah, basically electrical infrastructure play for data centers, and they're in demand. So random said KLAR. Is that Klarna? So this is your buy now, pay later stock, kind of like an Affirm. Basically, if we go into a recession, like people do stupid stuff, like they buy now, pay later a pizza. And in a recession, basically the fear is like these loans just won't get paid back. So if we do go into a recession, that would be the rough part. But they're doing pretty good. I mean, they just IPO'd. So the tough part is they just IPO'd. So we have only 1/4 of data since their IPO. So there's not much history. But revenue did grow 20%. And they did lose net income the past 2 quarters. So I don't know if that's going to persist. Yeah, so they're supposed, according to analysts, they're going to lose net income for the next 2 quarters in a row. So we saw that Klarna was on a dip. Here's actually a better alternative. This is Affirm. If you're looking for another pure buy now, pay later stock, they have so many partners with like Amazon, Apple, Shopify. But yeah, Affirm right here is another buy now, pay later stock, and they actually are just getting profitable. That's what I always look for. You know, it used to be a bad or a tough buy. They used to lose net income every quarter, losing 100 mil a quarter. Now they're making over 100 mil in net income a quarter, and the revenue's up 32%, so growing the same. So they're not on an exact dip like Klarna, but they're both buy now, pay later stocks. Okay, Fermi does the same thing as GEV. No, no, no. I was talking about, yeah, hey, what's up, Christian? So, ooh, there's some good ones. Is MCore or is EME? Is that MCore or Emerson? Oh yeah, MCore right here. Is MCore still a buy right now? So it's not the best buy right now, unfortunately, because it is at an all-time high. But here's why I also like wouldn't sell it. If I was a shareholder, I would not trim or sell out of this stock because of this forward PE. They only trade at 31 times next year's net income. That could still stretch higher. This is an MEP play to do all the complex mechanical and electrical work for data centers, and the growth is really good. The revenue is up 19, so revenue's up 19, and the net income is up by 27. That means net margin expansion. Margin's up 6% year over year. You get a small dividend that grows very fast every year as well. But they do the exact same thing as Comfort Systems. Actually, Comfort Systems had to sell off like 50 of its subsidiaries back in 2008 because they were about to go bankrupt, and they sold them to MCore. But yeah, two very similar stocks, and I own Comfort Systems. All right, let's do, Matt said Broadcom. Let's do, oh, hey, yo, Kai, are you still in here? We can do SLS if you're still in here. But let me do Broadcom first. This is your custom chip play. They help Google and Amazon make their own chips. And wow, Broadcom and OpenAI chip deal. Their chip deal requires Microsoft commitment for $18 billion first phase financing. Huh. Broadcom positioned to benefit from big tech AI capex surge as Meta raises forecast spending. Wow. So yeah, here you got to look at the 1 year out projections. Let me get some water real quick. We all know the Mag 7, just the Mag 7 specifically, which is, the top companies, Nvidia, Apple, Microsoft, Amazon, Google, Meta, Tesla, they collectively are spending just this year in CapEx $720 billion. That doesn't even include Oracle and OpenAI and all these other companies spending tens of billions as well. But Broadcom, what you want to look at is the future projections. You won't believe the revenue growth. They're going to have 100% growth. The revenue on the very left was $15 billion, and all the way on the very right, it's going to grow to $28 billion. That's basically a double. And not just the revenue, but the net income as well. It's actually going to 4x. Net income is going to go from $4 billion to $12 billion of net income in 2 quarters. Look at the net income right now. It's never even been close to $12 billion before. They've had some great quarters like 8.5 bill, but 12 billion in 2 quarters is going to be ridiculous. And that's, Semiconductor Solutions, their custom TPU growth from Google deal. That's up their semiconductor business is up 52%. After grew 11, after grew 4. So the growth rate is growing over there. You get a dividend as well, 0.6% yield. Look at how the PE is getting cut in half. It's an 83, but the forward PE is half of that. It's a 40. So that's what impresses me on Broadcom. And Afterpay. Hey, is there a ticker symbol for Afterpay? I know that's kind of similar to Affirm in Klarna. Is it a good idea to buy some STRL right now? Oh, Sterling Infrastructure. Yeah, another. Whoa. I did not expect that. They gapped up crazy on earnings 2 days ago. They must have had some crazy good earnings. This is like a Powell Industries competitor. So yeah, no wonder they gapped up. Analysts were expecting them to do 590 million. They did 825. And analysts expected 57 mil in net income. They did 95 mil. So they beat by revenue by 40%, beat on net income by 40%. So some huge organic growth. And I bet you it's from they do the complex mechanical or electrical work. I bet you it's because of data center growth. Wonder if we can find that news or something. No. I guess the news just hasn't loaded in, but congrats if you own this company. It's tough buying it at a 47 forward PE, but it seems all these electrical infrastructure stocks are to the moon, like Powell Industries as well. This is one that is like a competitor that does the same thing in the same industry. Not the exact same thing, but they've all just done very well sector-wide. Hey, Mamba, we've looked at SoFi like 4 or 5 times already on the stream. I'll look at it as the last stock, but I'm also, the best way to support me, by the way, if you want to support me, I said nothing, is to watch the stream on YouTube. My YouTube channel is called Nathan Robert. If you just type in Nathan Robert, you'll find it. And the stream stays up there forever. And if you missed anything, you can like replay it. And but we'll look at SoFi in a little bit, probably like 2 or 3 stocks after this. But you can go on the replay and like find it a bunch. So here's Red Cat Holdings. This is a drone company. And and then we'll do Lam Research. Heck yeah, Lam Research after this. So Red Cat Holdings wins contract to deliver 173 Black Widow drone systems to the Japanese army. And I remember the day they got NATO approval. So they had I remember they had this Black Widow drone and they got it NATO approved. So they can sell it to NATO members. And now it looks like they are selling it to the Japanese army. Red Cat Holdings reports full year revenue of 40 million, up 128% on the U.S. Army drone program delivery. So yeah, it really is like a military drone play. And look at the future projections. That's why this stock has done so well. Or it hasn't done well like super short term, but look at the future projection in 2 quarters. The revenue is supposed to hit 57 million. It's never even been close to that before. It was 26 million last quarter, which was a record, but 57 million is going to be double of that. I am shocked. So if I was a shareholder, you just want to wait 6 months. And especially it might even be higher with this new win of a contract from the Japanese army. They could even beat those expectations. So it's kind of tough to value because there is no forward PE. But as long as they keep beating on expectations, I bet the stock will just continue to do very well. So LRCX. This is Lam Research right here. And then we'll do a Carvana. And I see Cloudflare. Dang, Cloudflare fell 25% on the day. So Lam Research, they are at a crazy new all-time high. So congrats if you've ever bought this stock. You're definitely up on your money. Lam Research reports revenue of 5.84 billion, guides revenue of 6.6 billion on AI-driven demand. Management attributed growth to AI-driven industry demand and increased device complexity, requiring more etch and deposition steps. So I'm not sure exactly what this company does. It might be in like lithography or something. The AI-driven wafer fabrication equipment growth cycle remains robust. So I guess that's the industry they're in. But they are pricey. Yeah, look at this. So they trade at 40 forward PE. That is expensive. But a company like this, with the growth that they're having, deserves a high multiple. Notice the revenue is up by 23. So the revenue is up 23, but the profits, the after-tax net income, is up by 37. That means net margin expansion. Look at the growth rates on the bottom. Net margin's up 10% this quarter. Last quarter is up 9. Last quarter is up 9.9. That net margin expansion is huge. Like like Coca-Cola sells 1 million Coke bottles a second. They could just make 1 penny more in net margin or 1% more net margin profit on that. It'll bring them in billions. So that's kind of the margin thesis here. And they're expanding margins like crazy. And a good dividend, a 0.34% dividend yield. So yeah, semiconductor equipment play here. Very nice. Looks like the wafer fabrication equipment. Yeah, EDA etch or something like that industry. Pretty cool. Something that data centers definitely need. So Carvana, CVNA, this is a crazy one because I remember looking at the stock when they were going bankrupt. They burned all the shareholders, the bondholders, everyone, and the stock went to 70 cents. 70 cents a share. And now the stock had a crazy rebound and it's $77 a share. Oh, they did a stock split. So actually it was higher than that. So actually it says 77. It's technically 5x higher, but the chart hasn't fixed. So it really was 70 cents, but it should be around like $400. So it went from 70 cents to $400. And here's why. They actually, surprisingly, I don't know how they do it, but they make good money. This is real. Carvana genuinely makes a couple $100 million of after-tax net income a quarter. So yeah, here's the before-tax number, 581 mil. After-tax was 405 mil. So they genuinely are printing net income. They're probably doing share buybacks, paying off debts. So what's the multiple? A 30 forward PE. So yeah, they are expensive, especially because like, I don't really love this business model. It's like, I guess, buy and sell cars, but I don't know if because of tariffs, their like inventory value has gone up or something. But interesting one there. Definitely an interesting story. Yo, what's up, Trapper? Good to see you, man. All right, we'll look at two more here and then I gotta go. Yeah, Cloudflare, this cybersecurity company, is down 22%. They're basically saying we're going to cut 25% of our workforce to maximize profits. That's what they said today. Let's see if we can find that news. No. Okay, maybe I can go over here. So Cloudflare surprise 20% workforce cut marks first AI pivot. Maybe they're cutting the workforce because they don't need the workforce or something. Who knows? Their earnings aren't out yet, so I don't know. But interesting there. All right. AXTI or SanDisk. Yeah, SanDisk, check these out. Congrats if you're in any of the memory shortage companies because they are probably just going to continue to climb higher. SanDisk is up 12% on the day to a new all-time high, and here's why it might even go higher. If we just look at the forward PE, which is next year's net income, it's only a 9. You only trade at 9 times next year's net income. That could still go up to like a 12 or 13. Yeah, look at the projections. Next quarter, SanDisk is supposed to make $5.2 billion net income and then $6 billion the quarter after. Like, it's ridiculous the profits they're going to make soon. So, BlackBerry is up 85% in 1 month. Yeah, I don't even, wait, what was the news again? I forget. BlackBerry. Oh yeah, BlackBerry. Or wait. Oh yeah, it was their automotive stuff. So their QNX automotive software powers 275 million vehicles. Pretty cool. Expanded collaboration with Nvidia to integrate the QNX OS for safety. Cool. Well, anyway, they're finally making consistent net income. It used to be a hard buy. Yeah, look at this. BlackBerry used to lose net income every quarter. Now they're genuinely making over 10 million of net income a quarter, and analysts are projecting that. Next quarter, they're supposed to make 11, then 15 million the quarter after. So anyway, that was BlackBerry, and that was the stream. I hope you guys have a great rest of your Friday. I got to go. We've been streaming for 2 hours and 20 minutes. So again, if you miss anything, feel free to watch the stream back on YouTube on the replay. I feel like you'll like it. Watch my most recent shorts or whatever. But yeah, hit the like button if you haven't already. And let me end this with a portfolio update. So here's my Moomoo account. I try and stream every day. So my Moomoo account is down 0.03% on the day. This is called our buy and never sell portfolio because we don't trim stocks once we buy them. Like Powell Industries, even though we're up 1,000%, we're not trim. We have never sold a single share. Like same with Comfort Systems, we're up 19K or 430%. We've never sold a single share. We also have a Robinhood account, which is known as our dividend-only portfolio, where every stock in here pays a dividend. And well, we're at a new intraday low right now. So RIP. Here are all the stocks that we own in here. It's like everything's red except for Carlisle in the middle there. But the Roth IRA is kind of offsetting that a little bit. Our Roth IRA is up 6.25% on the day, and that's mainly just from Innodata. Just on a one-day move, they're up 82%. They had a crazy deal with Palantir, $50 million deal with Palantir. They're going to get 50 mil of revenue just this year, just from Palantir. So pretty crazy move. And then we have a Webull portfolio. It's kind of like my risk on account. No real specific rules I have, but we're up 23% all time. I just love being fully transparent. I'll share with you my open profit and loss, how much I'm up and down on every stock. If you got any questions for me, I'll always answer them. Here's my big losers on the day. AppLovin's down 6, Clear Secure 5, Reddit 5. So it looks like software specifically is falling. But offsetting that is AMD. I can't believe this. If you look at Intel, AMD, a lot of the AI stuff, they're all having a crazy rally. So anyway, see you later, Trapper. Thanks to everyone on the YouTube and TikTok stream, Matt, Kivo, and Bucksboy, dude, with the crazy $20 super chat. I greatly appreciate you. If you want to get interested in investing and you want to get this app I'm on right here, this is my favorite app. If you're going to get a brokerage to buy stocks on, this is my favorite one. I have an affiliate link actually in the link in my profile and in the link in the description of the YouTube stream. And yeah, see you later, everyone. Thanks, you Quinify, and Matt, Random, Japan, Furtive, Clem, Steven, JVM, Israel, Lopez. Yo, my bad if I missed on some stocks here today, but see you soon. Thanks again for all the support. Hey, see y'all soon. Thanks again. Yeah, Innodata is crazy. Yo, AJ, sorry, I'm ending the stream right now. I feel so bad. But dang, I've been live for 2 hours and 30 minutes. But yo, thanks again. Innodata is crazy. I'm going to make a video on that one probably covering